What if I told you you could get a copy of the Edge Finder completely free thanks to this live stream's sponsor, 8cap? 8cap is a regulated brokerage that has a special offer for viewers of our channel here, and I wanted to tell you a little bit about how this offer works. There's really only 3 simple steps to setting up a free copy of Edge Finder through our partnered broker, 8cap. Step 1 is you have to use the link being dropped in the live stream chat or down below in the description to create a new account. Step 2 is go to this link, scroll down on it, and you'll see the requirements that you must make in order for 8cap to essentially buy a copy of the Edge Finder on your behalf. Once you've created an account and deposited the required amount of money in order to qualify for one of the offers on that page, step 3 is to simply contact 8cap and or A1 Trading's team. On that page, there will be information for that. And then we will be able to essentially grant you access to our tools completely free, bought and paid for by your new brokerage, 8cap. Unfortunately, 8cap does not accept US traders. However, if you're outside of the US and interested in exploring this offer in more detail, again, like I said, we'll have that link in the live stream chat or in the description down below. Alternatively, you can just head over to a1trading.com/8cap. Thanks to 8cap for sponsoring today's show. Now back to the content.
Hello. Happy Wednesday. How is everyone doing? I hope you're all well. Hope you're all having a good week. We had a little bit of volatility this morning, so we'll cover a little bit of that. And we can have a look at some trade ideas. We'll take a look at the Edge Finder. I know the question's coming. I can spidey sense it. Where is Nick? You're not Nick. No, I'm not Nick. Nick is coming on later to take care of FOMC. I'm here in the meantime just to open the show. And you'll have a whole host of guests throughout the rest of the morning or afternoon, wherever you are, time-based. Nick sounds British. Oh, Nick, you sound British. Yeah, I'm on holiday. Anyway, hope everyone's good. Are we trading live? No, my live trading session's already done. I did that on my channel earlier today. How do you feel about Iran considering strikes against Israel, violation of temporary ceasefire? Yeah, what a mess. So there is some headlines that came in. Let me find it. Lebanon is not part of the ceasefire agreement with Iran. What else do we have? Qatar Defense Ministry says it intercepted all missiles and drones launched from Iran. Qatar Defense Ministry says it was targeted on Wednesday by 7 missiles and drones launched from Iran. The White House pushed Pakistan to broker the temporary Iran ceasefire. Yeah, there's loads of headlines that have come in, but it's all good. It's all good. So let's have a little look. I'll be completely honest with you. I got a little bit chopped up today. This morning I woke up to, what did we have? We had a Euro-dollar short that was stopped out for 1%. We had a pound Australian long that was also stopped out 1%. I had a scale in on dollar Swiss that was stopped out for about 0.2%. So a little bit of an ugly day for me so far. So yeah, down about 2% on the day, but it is what it is. That's the risk of trading during this type of period when we've got these geopolitical situations and escalations, de-escalations. Headline is one of those things. It's fine. Having said that, Aussie New Zealand is still active. It's still fine. I've got no problem holding this position. It's already break even, so it is what it is. I'm fairly sure I've not actually done any research today, but Aussie New Zealand still very bullish on the Edge Finder, score a positive 10. So my general rule set for trading is if the Edge Finder is bullish, I look to buy. If it's bearish, I'll look to sell. If it flips from bullish or flips from bearish into neutral, I'll generally look to close it. If it's still bullish, trade's in profit, break even, I'll let it run. Dollar Swiss, maybe not looking so good, but again, I will let this position run, especially with the fluctuation in headlines. I'm happy to just leave it. It is what it is. New Zealand yen is actually break even. I'm personally not in this trade, but it was called in my Discord. But yeah, I'm not in this one, so I'm not going to cover that one. And I am long actually on the pound New Zealand. I entered this one earlier today. So this one is more of a DCA approach, expecting things to sort of normalize and stabilize on the geopolitical aspect, and for fundamentals to take the main ropes again in market drivers. So pound New Zealand is still getting a very bullish reading of plus 12, which is obviously a fantastic sign. Trends are fantastic on the daily and the H4. The daily is now flipped out of this bearish trend into a new fresh bullish trend. So I'm happy to accumulate some very small long positions if we can continue to see this pull back. Obviously, if we start breaking below this 200 daily moving average, then okay, I'll admit defeat and close the positions. But beyond that, there is nothing going on my side. I am very, very sort of out of the markets right now. I've got obviously some positions open that I've just discussed, but in terms of actually placing new positions and really micromanaging or really doing anything, yeah, not really interested at the moment. So my watch list is completely empty right now. Completely removed everything this morning after we had those headlines, and I wanted to just reset basically for the rest of this week. Just keep an eye on how things develop and keep an eye on the fundamentals, keep an eye on FOMC tonight, and then maybe start repositioning next week. Anyway, sorry, I've completely ignored the chat for the past couple of minutes. Let me take a quick look at what you guys are saying. Sluggy, good to see you again. CHFJPY no longer a Bosch trade. I have no idea what a Bosch trade is. Maybe it's a typo. Aldi from Kenya, sup Kenyans. You know what's funny? We've got a shop in the UK called Aldi. I thought that's what you were talking about for a second. I doubt the news will. Not sure that I got stung as well. Yeah, I'm fairly sure quite a few people did. It's one of those situations where when we've got these environments where we've got geopolitical, the geopolitical environment is the main market driver. You either get escalations or de-escalations. No matter what, people are going to lose money because you've either got people that are betting, obviously, that we're going to see escalations or at least continuations. And then you've obviously got the other people that are on the other side. They're saying, oh, you know, taco Trump, de-escalation narrative, and they take the opposite positions or the opposite directions. So it is what it is. It depends what your view is. I'm not really taking a stance either way. If the headline comes in, it is what it is. I'm not in a position right now to say, Trump's going to either, run with this de-escalation, it will continue and everything will end up okay, or if he will come back, maybe tomorrow or next week or in the 2-week deadline and say, you know what, we're going to continue to bomb Iran. Who knows? James, do you think risk on is priced in already? What do you mean, Slow? Do you mean if the headlines are priced in terms of the de-escalation? If that's the case, I would say no, not fully. We've still got problems, if you will. So it's not just a case of, we've got 2-week ceasefire, or even if it's violated, regardless, we've still got the problem that the Strait of Hormuz isn't open. There's also that backlog. So maybe backlog's not the right word for this thing, but oil shipments are slow. They're very, very slow. I'm fairly sure, I might be slightly incorrect here, but I'm fairly sure the oil tankers move at around 11 miles per hour. Bearing in mind, they're traveling across the globe. So the period from when we have got oil, obviously the country, I'm talking generally speaking, of course, when the country's got oil and then it stops being supplied, that there's a period where we do still have oil, even though the supply is not really there anymore. Does that make sense? So the real effect of that hasn't necessarily hit yet, potentially. And then there's also, the thing of when is it going to open? How long is that going to take? So I wouldn't say it's completely priced in, because obviously there's still that uncertainty of if this 2-week ceasefire is going to just lead to nothing, escalations, de-escalate. You get what I'm saying, hopefully. Anyway. I'm not Nick. James is not Nick. I'm not, no. Just waiting for the market to settle. I think that's a good idea. That's kind of what I'm doing as well. What happened from news? Again, I need to know what. Do you mean the headline news, or are you talking about a specific news release? Gold up. What's up with gold? Let's take a look at gold, actually. I wouldn't say gold is up. Well, I suppose it depends how you view it. So we did have gold obviously up on the back of the headlines. We had the ceasefire announcement, or the ceasefire headline. Gold came up. We saw very typical what you would expect. We have oil has been elevated, feeding into inflation pressures or inflation upside, feeding into the sentiment, feeding into yields, central bank hawkishness holds, so gold down. That's what we've been running with. once the headline came out about the ceasefires, that kind of, not reversed, that's not the right way of saying it, but reposition the market, if you will. But I can't think of the right way of describing what actually happened, but that's basically what happened. So we've had this situation on gold. Headline came out to basically de-escalate that situation. So gold obviously caught a bid on the back of that, but because it's not a full ceasefire, it's not a complete end to everything. And we, as I said, we do still have the Strait of Hormuz closed. So gold spiked on the headline, but it's now correcting that move. First of all, because we had a bit of a violation, but also because the situation isn't completely neutralized. I feel like I'm speaking really fast, so I do apologize for not coming across correctly. I'm not explaining something fully. Anyone else having problems placing trades on TradingView? I'm not sure. I've not placed any trades today. I have had problems though with TradingView. Normally when, and I only noticed this once I actually started trading on TradingView, but when there is something going on, so like when gold was crashing, I think was at the end of January, start of February, also when oil was rallying, I did notice TradingView really slowed down, actually became a bit laggy. So you might be having that sort of situation, especially if there's obviously a lot of people placing positions, a lot of people on TradingView, servers might be backed up, but I don't know, I'm not a technical guy. Oil fell to $99. Do we bet that prices go back up? No, there is no reason to place any bets at the moment, I don't think. I'm at de-escalation from today. Met risk on, off. Yeah, no, I think the reaction is done for today off the headline we've had, yes. But in terms of the whole situation, no. Just longed pound New Zealand. I'm also long pound New Zealand. I quite like that one. Let's look at crude oil. Yes, we can absolutely take a look at crude. Yeah, so my view on oil right now is not necessarily it's going to complete. I do not think at the moment we're going to get any sort of corrections towards the the pre-Middle East situation prices. So I don't think we're going to see oil come all the way back down to sort of 60, 65. I think we've had that reaction, as I've already said. I think the likely outcome now, or the likely sort of next development for oil is some sort of correction back to the upside and then likely consolidation until we get a firm answer on what the next move is. Surprised Nasdaq isn't pumping. Well, again, I think it was largely priced in. So where is Nasdaq? Here. Yeah, so we had Nasdaq upside. What date was that? 31st. So yeah, we've had actually upside in Nasdaq for quite some time now, since basically the start of this month. And then we had the headline come out, upside, and then I've seen kind of the same thing. It's like we've had the upside, it's been priced in. So what can we really do other than look to correct that headline move? Well, I don't really think there is much for us to do because it's still, again, that uncertainty in the market. Yesterday was an immensely great day. I'm glad to hear that cycling club. Euro dollar. Let's take a look. Yeah. So I think the way I've kind of explained what we're seeing right now, I would apply that across pretty much all markets. So yes, I mean, we had the headline move to the upside. From that, again, right now, what do we expect? Well, no one really knows. I mean, Trump is unpredictable, but he's also known to back out of things. So there is that aspect of, is it going to escalate further, or is it going to re-escalate? Is it going to de-escalate? Who knows? So in terms of the direction right now, I would I do not suggest anything. I would imagine we do just correct, maybe not all of this sort of bullish or the reaction candle, but I would imagine that we do correct at least a partial portion of it. So even if it's just sort of a 50% retracement of it. From there, again, I don't really have much of a direction because it really, really depends on what happens next. Because bear in mind, in environments like this, where we've got all the markets are driven by the geopolitical aspects, the fundamentals are just not relevant, to be perfectly honest with you. They are, well, they are relevant, but they're not the main driver. So it's not really a case of just saying, oh, euro dollar is strong because the edge finder is saying it's strong. We've also, excuse me, we've also got to then account for the total or the whole picture. Whereas obviously day to day, normally when we don't have a war going on, we can look at central banks, or we could look at inflation and growth and labor and those things. We come to a trade idea pretty easily. But yeah, it's not quite the same. Excuse me, talking too much, I'm getting a dry throat. It's not quite the same at the moment. Aussie New Zealand longs from 1.205. So let's go to here. Where's my thing here? 1.205. I think that's reasonable. I do, yeah. I mean, technically speaking, I do quite like it. But what I've not done actually is just sort of measure this pullback here. So yeah, I really like it. So what we've got within this level is a little bit of previous structure, nothing overly crazy, but we do have previous support over here, previous resistance. Obviously, if we could see a little bit more downside into this fib zone, maybe that would be a good long position. But in terms, again, as I've already said, I'm not looking to really place anything new at the moment. I'm happy to just let the open positions run, and then sort of just take the markets day by day with headlines. It's been a hectic 3 months. It has. It's been a very, very wild year, to be honest, so far. I mean, even last year. Yeah, it's been interesting to say the least to trade while Trump's in office. Obviously, we've gone from tariffs to war. Yeah, intervention has become a myth now. Yeah. Silver's -6, is it? It is. Yeah, silver's getting a bearish reading, which is interesting. I mean, that's good for me long term because I've been saying this for a while, but I do like the idea of buying silver at some point, not right now, but if we can see something, whether it be continued downside on silver down towards sort of 55, I might start buying silver. At the moment, I'm not ready to do that, but yeah, I do think accumulating silver whilst it's still in double digits is quite a nice idea. What do I think about yen intervention? It's not likely at the moment, I would imagine. I say this all the time, but it's unpredictable because we do not get warnings. Luckily, I didn't take that. We don't get a warning. So it's not a case of, the MOF says, oh, by the way, guys, we're going to intervene on, Thursday at 4 p.m. It's like, oh, the market just spiked. What just happened? Oh, it was an intervention. So there's that side of, I could sit here and say, I don't imagine that's going to happen. It could happen tomorrow, but I would seriously imagine it's not likely at the moment because, as I've said multiple times, the pattern that we see on these interventions is low liquidity periods is when they happen. Right now, it's not a low liquidity period. So that would be something like a US holiday. In fact, normally US holidays, bank holidays, that type of thing. What am I talking about? In respect to what? I can clarify if I've, not explained something properly. Because I've only got about 10 minutes left, so I'm trying to sort of speed run through all of these points. So I might have misspoke, or I might have not covered something in enough detail. The passage of oil tankers through the Strait has been stopped, but yeah, I really missed the stability. Well, I mean, there's pros and cons. Volatility can be beneficial, but it also, yes, can be an absolute nightmare to deal with at certain times. GPAUD, yeah, so I was long on GPAUD, but I got stopped out on this move here. So the reason I was long is because it was bullish on the edge fund. I think it's dropped off now. It has, yeah. So I've actually got no interest in the pound Aussie anymore, long or short. So the reason I was long was, first of all, because it was so bearish on the edge finder for such a long time. It flipped bullish and quite convincing. I think it went up to, I think it was a +8, give or take. And we were also seeing rejections of this 200 weekly moving average. So I was like, you know what? We've already had quite large downside. The edge finder's flipped. We're bouncing off this 200. Maybe we can get some sort of mean reversion back up to these, back up to sort of around this previous low over here. Didn't work out. It is what it is. But at the moment, the fundamentals are not there. And I just don't see a reason to be trading the pound Aussie right now. Which moving averages? It's just a 200 EMA and a 50 EMA. There is no hard take profit on Aussie New Zealand. It's a case of just trailing stops and letting the trend do the work. There's just been a link dropped in the chat for the free momentum model. So it's a completely 100% free course. It's got I think it's a 30-minute video and a PDF. No strings attached, no paywall, no cost. So if you would like to learn a little bit more about the Edge Finder and how to take the Edge Finder and apply it to actually taking trades with pullbacks, fibs, trends, get that. It's, again, 100% free. So worst case scenario, you spend 30 minutes and you don't like it. GPAD thoughts. We've just spoken about that one, so I'm not going to do it again because I'm a little bit strapped for time. Do I have any ongoing trades? I do. Yep. So Aussie New Zealand, I'm long. Dollar Swiss, I'm also long in a bit of drawdown. Pound New Zealand, I'm in started a DCA approach, so it's very, very small size. But yeah, looking to buy this on dips. New Zealand yen, I'm personally not in this trade, but it was won by my team. So this one's stops at break even on this trade. So it's very likely just going to be a no win, no loss trade. But yeah, that's it. As I said earlier, I'm keeping my trading relatively light at the moment just because I'm not very comfortable having much risk on the table given the current landscape. My best to sit out until headlines slow down. Yep. Euro New Zealand longs. No, I wasn't in Euro New Zealand longs. Hi James, you mentioned you have your own channel. Please kindly share the name. The link to my channel was in the chat if you scroll up a little bit, but if you just search, I don't even know what you said. I think Forex James, my YouTube channel should come up. Or they might drop it in the chat again before I leave. CAD Yen. CAD Yen. I don't think I really have anything specific on CAD Yen. So when you're trading the CAD, first of all, you obviously need to understand it's driven by oil heavily. So you would need to first of all decide what your bias is. Do you think we're going to get the Strait of Hormuz reopened soon or not? That would heavily dictate what you think of CAD Yen. So if you're expecting the oil supply chain to remain disrupted and slowed down, then you would really want to be looking to long CAD. So CAD Yen long, maybe, sure. But then obviously the opposite applies. So personally, as I've already said, I don't have any, I don't really care, to be honest. It's not a market I'm looking to trade. I don't know if it's on the Edge Finder. Let's see. It's not on the Edge Finder either. So first of all, I'm cautious on the headlines, but it's also, again, not on the Edge Finder. So my personal bias is neutral. Let's see. I mean, yeah, I just can't really justify anything on that market. I was going to try to look for some sort of entry, but to be honest, there's not really an entry, even if I tried to force one. The RBNZ rate decision. Let me just take a quick look for you. Hold on, just bear with me. I'm trying to pull it up. That's interesting. My terminal doesn't have anything. No RBNZ specific data available. Strange. Shorting CJ. When you say CJ, you're talking about CAD or Swiss? Do you use prop firms? I use Topstep, but only for scalping. CAD has been acting real weird, even with no ceasefire. CAD wasn't performing that well. Yeah, maybe not against things like the yen, but pound yen, sorry, not pound yen, pound CAD, euro CAD, we did see sort of standard reactions. CAD strengthens with oil, and now obviously we're seeing a little bit of a downside. So kind of hand in hand, if you will. Obviously, when I say they're related heavily, they're not one-to-one markets. So, for example, if oil moves 10%, it doesn't mean the Canadian dollar is going to move 10% as well. But when oil does move with strength and for a reason, generally we will also see that reflected with the Canadian dollar. Yeah, New Zealand US dollar also was on my watch list previously. And I mean, you can see I was actually looking to go short. But yeah, I mean, I do like it. Fundamentally, I think it's still great. Even on a geopolitical aspect, I don't mind it. But I'm just, again, as I've said it before, but I'm just very cautious at the moment. What we do have, I've just noticed on the daily, actually, is a cross on the EMAs. Nothing crazy, but it does just signal that we've come out of this bullish trend and we've now formed technically, or objectively, sorry, a bearish trend. And we are seeing this rejection of our 200 daily moving average. So if we can see maybe a nice H4 candle close, maybe it could be quite a nice position. But yeah, I would remain cautious. So I would say the New Zealand US dollar is probably the most, in my opinion, not financial advice, the most optimal trade right now, purely because the edge finder is giving it a bearish reading. It's the most bearish reading. Technicals look okay. And I do still think the dollar is relatively strong. So something like this, I think, is fine. But I would just need to wait for this H4 candle to close and then maybe. But in terms of in terms of the risk for this trade, I think I would have to massively decrease, something like 0.25, maybe 0.5 at max. But yeah, it's just not an environment that I'm happy to be overly involved with. Hey, I'm new past my eval, but I don't understand gold past 3 days. What do we do? Okay, there's a few people asking for gold, so let's take a look. So, how much time do we have? I've only got 2 minutes, so I'm gonna have to try and be quick with this. Yeah, I mean, there was confusion around gold. Why was gold weakening in a war? Very simple, because oil was strengthening. Oil strength means people have to spend more on energy bills. Putting it very simply, in that case, we expect higher inflation. With higher inflation, we get higher yields. We expect central banks to go and hold or hike even. So when we've got that aspect, and obviously then we've also got the dollar strengthening, we've also got some currency strengthening on the higher yields. When we've got that situation, gold isn't in an environment to strengthen. If anything, it's actually in an environment where it should be weakening, which is what we saw. Now we had the ceasefire headline. We did see gold spike because obviously that's sort of a reversal on what I just spoke about, or a slight reversal. But because we've had a violation of the headline, a violation of the ceasefire, and the ceasefire is only for 2 weeks, we still don't know what's going to happen going forwards, really. So gold is in a bit of a limbo right now, which is why I'm not really paying much attention to it, because there's just no reason to trade it. It's almost like a little bit of a coin flip, in my opinion, right now, because obviously it's either we get an escalation or we get a de-escalation. It's like, well, I don't really want to just place some money in the market for a coin flip. Do you trade indices on Top Step? Yes, that's pretty much all you can trade, I think. I just trade NQ and YM. Do you think NZD weakness is already all in? I don't see more weakness coming. New Zealand dovishness. Yes, Max, I do agree to a certain extent. I don't have time to actually run through it. I'm about 4 seconds away from my slot ending, but we can talk about New Zealand dollar tomorrow if you would like. Anyway, ladies and gentlemen, I actually have no idea who is on after me. I do apologize. I should have thrown this off a little bit more professionally, but there is someone coming to take over the show, and I'm sure they're fantastic. So guys, I'll see you all later. Stay safe. Don't get margin called. I'll see you tomorrow, and don't leave because someone is coming on after me.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone. Good evening, good afternoon, wherever you guys are watching here in the world. As you guys all know, unless you're living under a rock here, we do have lots of movement going on here in the market. So as always, guys, feel free to drop any chart markups that you want me to go over here in the chat. I'll go over them to the best of my ability, give you my honest opinions, all that good stuff. Again, this is not financial advice, but we have a big day today. So we did have U.S. and Iran ceasefire. However, you do have the Fed meeting minutes today, so that's why we are streaming here a little bit later here on the day. But let's go ahead and talk about everything. I'll cover everything, my positionings, go ahead and show you guys here. I actually went against the grain here, so some of you guys might flame in the chat, but I did say yesterday that I was willing to go ahead and short Kiwi Dollar if we get any pops, and we did go ahead and get a pop in the Kiwi Dollar up into that 200-day moving average there. So trade is currently at break even. I do expect some volatility today as we do have Fed meeting minutes, but I'll go ahead and go over the whole spiel for you guys. So starting off with what actually happened here. So of course, you guys know oil dropped big time. Ceasefire with U.S. and Iran, contingent on that the Strait of Hormuz remains open there. So we did see a little bit of conflicting headlines here this morning. In fact, I won't go over all of them there, but there were some drone strikes going on, continuing. And basically what's happening is U.S. and Iran agreed to the ceasefire. However, Israel is not too happy about that, right? They don't like that. So, but Trump's running the show there. So there was some back and forth between Israel and Iran. So it seems like they don't want to back down. But again, we'll go ahead and see what happens as things develop. I went ahead and drew this trend line here to the upside. Again, this is just my personal trend line. So technicals are subjective to the individual. So take this one with a grain of salt here. But we did go ahead and see some kind of a bounce on this uptrend here. So if we get a break below that, then I say that that's pretty good, right? Maybe we see some continuation to the downside, but for now, we are kind of chugging along here. So that's what we got going on. The reason why I went ahead and shorted the trade or shorted Kiwi Dollar is because, one, the underlying fundamentals are still in the direction to some more downside in Kiwi Dollar. If you go to the edge finder here, which is what I use to go ahead and make all of my trading decisions from a fundamental perspective, I can show you here that the Kiwi Dollar is still bearish despite this recent flare up here. So if we go to the very bottom, it's getting a very bearish reading of -9. And so the reason for that, right? You guys have asked me this before. What's going to be my take, or what's going to be the next thing that I pivot to as far as making trading decision goes once this whole war is over? And it kind of correlates with what's going on right now, which is interest rates and what central banks are going to do, right? We do have Fed meeting minutes today. And depending on the tonality of that, they could be taking a hawkish stance, right? Depending on how long it takes for this oil spike to pass through, that's definitely a possibility. And if you do see that, then perhaps we do see a little bit of a repivot in the dollar, right? This move has already happened. So I'm not going to be chasing price to the downside when it comes to oil up or dollar down, right? This thing has happened. These things don't just go in a straight line to the downside, right? So you do have the possibility of that, right? You do have the possibility that the straight doesn't open up as easily as we thought, right? Iran has been known to go ahead and drag their feet when it comes to requests like that. So that's still unknown. We did go ahead and bounce into the 200-day and 50-day moving average there on the dollar index, and we seem to be popping up a little bit there. Again, though, if this thing decides to de-escalate, right, and the dollar continues to fade lower, then I just take the loss, I move on. But that's my first attempt there on the Kiwi Dollar. What I like about the Kiwi Dollar compared to the US dollar, right? Kiwi Central Bank, the Royal Bank of New Zealand, has taken a very lax stance when it comes to the elevated oil price. They basically say they're going to be neutral on it. They're going to let it pass through. They're going to try to cut as soon as they can, things like that. Whereas the Fed, as we listened to the last meeting that we had with Jerome Powell, he was basically saying, the base case is keeping rates steady for as long as we can, and potentially hiking if needed, right? So there's a little bit of divergence there when it comes to those central banks. And the U.S. has held the rate at this time for a very long time where we're at right now. So I don't think it's actually bad that they hold rates if they need to. In fact, the U.S. economy has been quite resilient despite all of this, right? Depending on your opinion, if you think the data points are fake or whatnot, you can't lie. The numbers are looking quite good there. So you do have, I think, a strong U.S. dollar. I said yesterday in the Discord here that I was bargain hunting on any dips that I can find on the dollar. And I do like this level here, this 50-day moving average along with that 200-day. So took a stab at it there, went ahead and short the Kiwi dollar there, and we'll see how that plays out. Let me go ahead and address here the comments for you guys. And there's also, oh, cool, you're in New Zealand dollar shorts. Fantastic, fantastic. So I'm the only one buying Kiwi. No. So I'm definitely going against the grain here. So I did see yesterday in the chat that everyone was going basically short the dollar via different currencies. And by the way, that is a very valid trade if you continue to see a de-escalation, things moving forward in that nature. Completely agree with that. I'm just going ahead and I think that the dollar is good to buy on dips. The central bank divergence between how they are willing to address the elevated oil. Kiwi's a little bit more lax. The Fed's looking to be restrictive if they need to. The technicals look good on this trade. The fundamentals look good on this trade. The edge finder's telling me bearish. So, that's why I took this trade here. Very risk defined, low risk. I understand that this can get stopped out very, very quickly if you see a de-escalation in the Middle East. So that's kind of what I'm watching there. But for now, the trade is here and break even. Again, I do expect some volatility as the day progresses once we do go and see those Fed meeting minutes and we kind of break them down there. So that's what we'll be doing here for the stream. Later in the session, we'll go ahead and break down the meeting minutes and we'll give you guys a good update on that. Okay, so any chart markups here that you guys want me to go over, I would be more than happy to go ahead and cover them for you guys. And if not, I do have my friend Marco here joining us in a minute, so I will be good there. Speaking of, so let's go ahead and look at yields, right? So yields are essentially driving the story here. Yields are coming down lower here. So this is going against my trade here. We'll see how far they go, how they shift as the day progresses. And, after all of this progresses, let's go ahead and look at two equity markets. Actually, let me go ahead and backtrack that one there. Equity markets did go ahead and get above those 200-day moving average, which is really, really good to see. That was one of the things that we had to really overcome. This is the Nasdaq chart here. Where's the Epic pen? There it is. Nasdaq chart here, we were kind of below that 200-day moving average and the 50-day. And this level of what could be resistance here. This was very good support. And then we were trading below that. We have now since overcame that. So waiting for a retest of this level here. And if we go ahead and hold that firm, then maybe we'll go ahead and see some upside potential on equity markets for the US. The S&P and the Dow Jones are under the same environment as well. So if you go ahead and look at the S&P 500 there, you can see that we are now trading above that 200-day moving average. Again, looking for a retest into that zone. And then we'll go ahead and see if, the bulls actually solidified that move to the upside. But for now, this is the initial move there. So things can happen. Things can go either way. So definitely be mindful of that. One thing I will say, though, guys, also to go ahead and join the Telegram channel. It is completely free value. Every single day we go ahead and do chart markups, analysis, bonus content there, and even discounts to the A1 trading products, but also prop firms as well. So if you guys are looking to go ahead and trade prop firms and take your trading to the next level, all for free on the Telegram channel as well. And then we also post live updates as soon as they happen. If you need to know about it, we will make sure that you know about it. This was yesterday, a couple minutes after the ceasefire announcement. I went ahead and updated you guys there. So go ahead and join that completely free value. And the Edge Finder 2 is also on a discount as well for 40% off. So definitely go ahead and take advantage of that. Someone says, Alan, dollar Swiss. Okay, I love that. I love that chart there. Dollar Swiss trading all the way back up into this level of support. This was support for a long time. Then it turned resistance here. So support once, twice, 3, 4, 5 times there. We finally broke out and then we came back into this level and it was really, really strong resistance for a long time there. So this level here that we're currently in is a strong one. You can't doubt that. Now the question becomes, is it to the upside or to the downside there? I think that if you are a dollar bull like myself there, you think the fundamentals for the dollar are pretty strong. I think this presents a good risk to reward opportunity, perhaps a market order here and a stop right below that 50-day moving average that you see there in red there. I think that's a good risk to reward. And then you can target, the recent relative highs or even the upper end of the channel there. Let me go ahead and refer to the edge finder to see what that score is looking like. From my understanding, though, it should be a bullish one. So let's go ahead and see dollar Swiss. Dollar Swiss is getting a neutral reading, actually. So perhaps not the strongest. However, the technicals look really well. So my personal opinion, I'm already in Kiwi Dollar short. However, this one to the upside, if you are like myself in the camp of dollar bullish, strong fundamentals, or if you're in the camp of you want to kind of hedge a little bit of what's going on right now, right? Have some diversification. Then go ahead and I would go ahead and take that trade. Not financial advice, of course, but it seems to be like a good risk to reward right there. UJ, oh, absolutely. So let's go ahead and look at this one. This one's a very interesting one. There's a lot of forces at play here. Obviously, you're getting some softness in the dollar, so that's what goes ahead and makes UJ go lower there. You are also at this level of resistance here, this 160-ish area, anywhere between the high 158s, 160, 161. This is all level of resistance there. But what also makes this chart interesting is that you do have the Bank of Japan that is very interested in strengthening the yen if it gets too weak against the dollar at these levels. The 160, 162 area, not a good look there for the Bank of Japan. They want to go ahead and intervene. They verbalize that intent as well. But the only thing that makes that tricky is the timing of it. No one knows the timing of it. It is purely a speculation play. If you decide to short the dollar yen on that, that's something I attempted here last week. And I got out of it for a break even because the swaps are heavy and, there's chance that there was an escalation. And so the dollar continues to chug higher. But now you're starting to see a de-escalation, a softening dollar there. And if you continue to see that, I think that there's a real chance that the Bank of Japan can definitely intervene if the dollar yen continues to stay elevated between 159, 160. The reason being is why they didn't go ahead and intervene before is because the dollar was very strong there. It was getting that safe haven appetite. People were really trying to get into the dollar. And so they were essentially going to, if they were, intervene into strength in the dollar, which, could have made the intervention or the strength in the yen short-lived there. But now they're starting to see the opposite. So if you see a weak dollar and they intervene into that, that could actually go ahead and propel this thing lower. And they're not actually going against the grain, if you kind of get what I'm saying there. So if that makes sense, go ahead and type yes in the chat. Hopefully I articulated that well. But yeah, dollar CAD was actually one of the pairs I was looking to take. This actually looks like a really good one, and I might add to the position if we get a deeper pullback. Dollar CAD, for a lot of reasons, I really, really like. If oil continues to stay subdued, that definitely goes ahead and hurts the CAD. In fact, you did see a steep drop off in line with the oil price go ahead and trading lower there. So you see this here. We are now at that 200-day moving average or very near it. So definitely looking to go ahead and pick up dollar CAD there. In fact, I might go ahead and after the Fed meeting minutes, depending on the outlook there, I might actually scoop up some dollar CAD. And if not, I think picking it up right here, if we get a deeper pullback into this level, is actually a very, very strong trade there as well. So yeah, the dollar unwind is not by surprise. I was definitely expecting that, but I'm definitely looking to go ahead and buy the dollar on any dips. In fact, let me go ahead and verify. Dollar CAD is getting a neutral reading, very borderline of 4. So not quite a bullish reading of 5, but very, very close to it. But yeah, dollar CAD is one that I'm really, really looking to go ahead and take on there, especially because, if you continue to see oil prices lower, the Canadian dollar is somewhat pegged to that. And so that would definitely go ahead and hurt the Canadian dollar and, have this chart go ahead and drift higher. So the technicals are looking quite good right now. We'll go ahead and see the confirmation from the Fed meeting minutes, depending on how they are willing to tackle the said elevated inflation that we've experienced or elevated price of oil that could lead to inflation. We'll go ahead and see that. I'm not going to add it right now just because I'm already short Kiwi dollar. So I don't want to be too heavy in a position without letting the meeting minutes play out, if you guys understand what I'm saying. Max said, USD CAD, I'm waiting lower. Yeah, man. Yeah, me too. Am I still in my Swiss yen trade? Yes, I am. Swiss yen is right there, right below that 50-day moving average there. This thing has been very, very slow as far as playing out. We've been just hanging out here in this level was in brief, very, very small profit, then very, very small drawdown, and we've been kind of just hanging out there as well. But we're still below that 50-day moving average, so that's kind of like the resistance level that I'm looking at. We're actually hanging out within this trend line as well. But again, this one's gonna be pretty slow, but it's giving me positive swaps, so I don't mind trading in this direction here. But we'll go ahead and see if you were to see dollar Swiss actually get a pop, then this one will go ahead and go lower. So I like Swiss yen still. USD CAD longs are fire. Yeah, man, I'm waiting for that. Thoughts on pound dollar? Yeah, for sure, Felix. So pound dollar definitely elevated in these rejecting this level here on a very short time frame here. If you go to like a 4-hour or 1 hour, you can see that we've rejected this level. However, in recent times, the pound has actually gained some strength. So you are seeing it like up here in the very bullish camp. And if you go to the Eco Surprise, let's go ahead and go to macro scanners, surprise index, you can actually see that the pound dollar is actually picking up some steam there. So this one is in green. So kind of relatively strong there. Again, it depends. But I think there's better ways. I think if you're flat and you're looking to enter, I think Kiwi Dollar is still very weak. So that one will be the preferred one in my opinion. And you actually got a decent pullback in that one too. So the technicals line up just as good as the pound, I would argue. Yeah, USD CAD long, nice. Yeah, we can all agree on that. Aussie yen, I haven't looked at that. I would imagine it is through the roof. Kind of, yeah, very elevated there. I wouldn't trade this. I don't know how I would trade this. This one made a lot of sense when the Aussie dollar was very hawkish, really looking to raise rates, all that good stuff. All of that was going for it. And then you saw some misses in economic data, like their unemployment rate came in soft, other things as well. So I don't know. I don't know if I would trade this one. I think there's better ones out there. But if we could look at the top setups page, let me go ahead and look at that for you, give you the score. Let's go ahead and see Aussie yen. It's getting a neutral reading of 3 as well. So yeah, probably not the best one. Probably not the best one. Thoughts on pound Swiss long? Okay, pound Swiss, that sounds interesting. So pound Swiss getting a very bullish reading of 10. So I love that. Let me go ahead and look at the chart for you guys here. Pound Swiss. All right, so we're kind of chopping around here. Chopping around between the 50 and the 200 day. So, oh man, I don't like trading in between ranges just because it can go either way. And the risk or reward, depending on which direction you go, is the same, which is not good. So, if you get filled here, you do have equal amount of risk to reward ratio. So I would wait. I mean, obviously the bias is long on this pair. So I would wait for a pullback of some sort, somewhere around here, 1.05500. That's a good level here, a good relative discount relative to where we've been trading at in the past. If you're already filling the position in this good area, then fantastic. You're kind of killing it there. But as far as placing a new trade, kind of tricky. I wouldn't trade in the middle of this range. What are your thoughts on pound Kiwi? Pound Kiwi, I would say pretty much similar. Let's go ahead and look at the technicals there. So Edge Finder, I did say that, let's see, pound Kiwi. Okay, look at that. Pound Kiwi is getting a very bullish reading of 12. However, different dynamic there, right? You are seeing this one is actually relatively discounted, maybe testing that 200-day moving average closer to that. Let me go ahead and switch this out. By that 200-day moving average, versus pound Swiss was in the middle of the range. So this one's actually giving you a little bit of a pullback opportunity. That kind of looks good there. So thank you for that, man. I might investigate this one further and go ahead and trade that one myself. But look at that. Pound Kiwi trading into that 200-day. You can put your stop right here or right here, depending on how far you want to take it. And then you can just target the recent high. So I'm actually going to go ahead and write that one down, pound Kiwi. Cool. If I have some room after dollar CAD longs, if I do get that opportunity, then I can probably go ahead and trade this one with a very small size and see how it plays out for sure. That's the one you love for sell. Bullish for too long. Okay. Yeah, I'll go ahead and definitely investigate it. What's up, Marco?
Hello. How are you doing?
Very good, man. How's everything for you?
Pretty good. Pretty good. Managed to close my oil position right before Trump and managed to bank some profit on UJ right after Trump. So yeah, pretty happy with the outcome so far. So for oil, had the long position, trailed the stop to around 108, got taken out right before the sort of the deadline. Net, I banked 1.5% on this one. And on UJ, I took profit once we dropped. And in the morning when I woke up, I took profit. Essentially, I should have taken profit on the 19th of March, which I didn't. So that was a mistake. Took it now and planning to just go ahead and sell once again if we hit 160. I think we can get a couple of small trades in before an actual intervention. So just grinding at that 160 level and selling on drops could be a pretty good place. So essentially, if you got in on, let's say, the 18th and you sold on the 19th, then you went in again on the 26th and you sold today. 2 trades, nice winners. Small winners, yes, but still pretty positive in terms of, let's say, the edge. That's the game plan. If we go back to that level, I'll just sell again. And if we get an actual intervention, then we could get a pretty big waterfall of let's say the downside and a nice large trend, meaning a positive reward to risk. So a pretty safe play in my opinion. Euro Swiss is similar. I hope it drops back near the 0.9 because that level should get defended. So if it goes anywhere to, let's say, 0.908, I'll be happy to go ahead and buy, betting on a bounce, because I think we established a price floor. And the only trade I'm still in is Swiss yen. So I'm holding that. I think we found a ceiling on that. I think we made the reversal of the trend. And I think now it's time for us to go to the downside. Yes, today it's bullish and it's in a bit of a drawdown, but I don't think this is a bad play. So still holding it. What about you?
Yeah, very good play there on dollar again. I love the idea of just like fading it once we get elevated there, because it seems to be like this level seems to be like a good ceiling. And so just fading on any pops, and then hopefully you go ahead and catch that big move that we're anticipating. So definitely fantastic there. Swiss yen, same thing, a little bit of drawdown there. This one has been relatively slow, but I actually like the fact that it's not moving hugely on this whole thing that we're experiencing there. So hopefully that intervention there does play out, and then we go ahead and drift lower there. As far as new trades, Marco, I did go ahead and go a little bit contrarian. I went ahead and shorted the Kiwi dollar. So I voiced this during the week there that I was willing to be a dip buyer in the dollar. Has strong fundamentals. Again, this is just me playing the contrarian. Good technical levels. The edge finder's bearish on this one still, despite the pop that we've seen. And one thing that I'm kind of speculating on is that if you were to get a hawkish meeting minutes or neutral hawkish, where last time the Fed or Jerome Powell said that they're willing to go ahead and hold rates if necessary. That's the base case, or hike rates if needed, right? Whereas the Royal Bank of New Zealand has actually taken a very lax stance at this whole elevated price of oil and the inflationary pressures. They're basically looking to look past it and cut rates as soon as they can. So I do like that divergence there in a central bank, from the tones that we've been hearing. However, that will be solidified today. We'll see. Maybe we get surprised and the Fed's like, hey, man, we're looking to cut as soon as we get a chance. And then that will definitely go ahead and disrupt my trade. But I do like that. The fundamentals behind the dollar are very strong as well. We've seen that consistently, even at the current rates that we're at right now, right? So we've been hanging out where we're at for some time now, and the dollar's or the U.S. economy has been doing quite well. So I like that. We did go ahead and trade into the 200-day and 50-day moving average. Now, as of now, as of we're streaming here, we are getting a little bit of a bounce on top of that. However, this is just the beginning stages of it. So there's definitely a chance that this thing can roll over and continue lower. And in that case, I'm wrong. But I think that was a good way for me to play the contrarian play with a lot of things kind of lined up in my favor.
I like it. Also the 200 EMA on NU on the daily, as far as I can see. One thing that I like is about your positioning is we got a ceasefire, but US is saying one thing, Iran is saying a whole different thing. Like, is the strait open? Are ships passing through? I don't think so. I think only a select few ships can pass. I think it's 10 to 15 ships. If you look at financial juice, where is it? So
No, I agree with you there. I think it's supposed to go ahead and open up either tomorrow or Friday. So it's still like not completely open. And I don't know if you saw this too, Marco, but the headlines as far as Iran or Israel still being active, or Iran still being active against Israel. I think that's what you're going to show us here, right?
Yeah, I mean, this is the latest one. So Saudi Arabia's vital east-west pipeline carrying crude has been attacked, probably by Iran or allies. So that's not great. I mean, yes, you could make the case for the leadership decided to do a ceasefire, and now it takes a few hours or maybe even days for the order to go through all of the smaller posts. But with Iran's track record, maybe we don't get a real ceasefire. And I think, as you mentioned, Israel is still attacking Lebanon, and the ceasefire doesn't seem to mean much for them. So it could be just Trump getting ahead of himself, trying to save the markets. I mean, what I think could happen is the midterms are approaching, and Trump is looking for any off-ramp to end this thing, and probably he thinks that his popularity will go up if he ends the whole conflict, because he'll be like the savior that brought peace, or he started in the beginning as well. But yeah, that's what I'm thinking. Just a second, I'm getting a call, so just give me 1 second.
Sure thing. So yeah, to Marco's point, there is a somewhat willingness to go ahead and end the war there. You have midterms, which is very important there as far as for sentiment of the general public. So I do see that happening. And so the basis of this trade here is basically essentially a little bit of a diversification of what the market's currently trading on right now. So this was a good attempt, in my opinion. You have the technicals lining up, the fundamentals there, but obviously I do want the war to end. So I'm very okay if I lose out on this trade, as a result of that. But yeah, we did have the initial move, and usually initial moves don't just last forever. They're very, very strong, and then there's just some kind of a mean reversion type thing.
Yep.
And then if it's actually true, then it continues in that direction, or if not, it continues in the opposite direction. But yeah, the big move has already happened. We saw that last night, minus like 14-16%. I mean, oil from the highs, I think it was like in the 20s. Yeah, 22% to the downside. So yeah, this, like, if you have the expectation that this thing, because of this, is going to happen, is this candle is going to look just like this, like, that's not how it works, right?
Not gonna happen.
That's kind of my thought process there for the trade. Marco, are you looking to put any more risk on the table there, or anything you're looking to trade?
Absolutely. I'm pretty flat. I only have the Swiss yen sell. I would like to add to my book, but I'm a bit confused with the ceasefire. It's a bit unclear to me. It's a bit unclear of what sort of an agreement they have actually is there even an agreement, and why are the attacks still going on? And will the strait be open for every ship or just Chinese ships? So I'm a bit hesitant to go risk on. My first pick would be the Nikkei, which already flew higher. So if we look at the Nikkei, just a massive candle, almost back to all-time highs. Pretty crazy. I would love to buy pullbacks on this one. I think the Edge Finder is super bullish. Let me double check that. Oh, misspelled. Yeah, very bullish reading there. So I would probably try and take a stab at it with maybe 0.5% risk. If we get a bit of a pullback, maybe an ABC pullback, a bit of a flag pattern there, maybe the 20 MA catches up. I think that's a nice position. First target would be all-time highs, or essentially I would take profit near the all-time highs. I do like Nikkei the most. So what's your take? What do you think? Looking at the S&P, there's a large move higher. There's been a breakout of the trend line we have been talking about. So what are you looking at? Are you now completely risk? Of course, you're not risk on because you are buying the dollar. Essentially, you bought the dollar. But let's isolate just the stock market. What's your take on it? Are you convinced, or are you looking? Are you thinking this is a fade, or are you looking to wait this week out and see if we hold the level and maybe even continue higher?
Yeah, so no doubt, no doubt in my mind, the stock market definitely loves what we're seeing here. We reached the 200-day moving average, which is a big hurdle that we had to overcome as far as equity goes. We are now above the 50-day as well. What would really solidify this move here would be a pullback into this level of whether it be the 200-day or this level of support here that has held in the past, and then we continue higher. But Marco, if you're open to the idea, if I can pitch you a trade, if you're willing to listen. Again, everyone in the chat here, not financial advice. This is one of the ones that I'm looking to go ahead and pick up here. Dollar CAD, this whole move, dollar to the downside, has been big. However, it's still relatively holding up here despite everything that we've been seeing here. If you just look at the drop that it has experienced compared to other ones like dollar Swiss, dollar yen, not the biggest ever. You do have a kind of win-win scenario here. If you were to get a de-escalation, oil lower, that's like the main trade. That's what leads the direction there. And if oil is lower, then the Canadian dollar starts to weaken, right? So that's like the scenario one. Scenario two is that there's a continued escalation and the dollar continues to catch that safe haven bid. In that case, it still goes ahead and appreciates there. The thing with dollar CAD is we've been trading in this range for some time. We finally breached this level of resistance. I was waiting personally for a pullback into this level here. We never got it. And then we breached the 200-day moving average, and I was waiting for a pullback. We never got it. And so now we are, nearing that 200-day moving average there. So this is a trade that I'm looking to pick up, whether I pick it up here with a tight stop and I'm wrong initially, but then ultimately I think this level here is great value, 1.3700. If we can somehow find our way here, I'm looking to go ahead and pick up that trade as well. The only reason why I'm not in this trade right now as I'm pitching it to you, Marco, I definitely understand that. We are we're neutral here on the edge finder, but this thing throughout the whole duration of this war was a bullish reading there. So
yep,
I love that. Also, too, we do have the Fed meeting minutes, of course. If they come out completely dovish, then the dollar is just going to continue losing momentum, and that's what kind of drives this thing lower. But that's kind of my idea there. Dollar CAD, I like the idea. Again, I'm just waiting for us to overcome that meeting minutes, and then I'll definitely go ahead and participate if it makes sense.
Love it. You have a buy limit or waiting out the meeting minutes?
No, I'm just gonna wait out the meeting minutes. If you were to see actually like some kind of a neutral to hawkish stance and we bounce, on this 200-day, I actually like the idea of even like buying the breakout here because it kind of looks like a V-shaped recovery, and I want to be on the right side of the V. So even if we kind of start trading a little bit higher there, I still like the idea of buying dollar CAD.
Nice. Okay, so you're kind of hedged for both outcomes. If we get an escalation, the dollar should appreciate more than the CAD. So oil will go up and CAD will probably go up as well, but the dollar should beat it because it's a safe haven. But if there's a de-escalation, then the CAD should go down and the dollar,
which kind of keeps the dollar a little bit under.
Yeah, so your losses are kind of limited.
They're limited.
You can have a tight stop loss. Nice.
Correct.
I do like it. It's kind of like selling UJ. It's kind of like buying Euro Swiss near 0.9. So I do really love this trade idea. You know what?
Cool.
If Edgefinder flips bullish, I'll be happy to allocate some capital to this. Doesn't have to be like a huge position, maybe like 0.5% to get things started. And we seem to be right at the 20 MA. So yeah, that's looking pretty good actually. Thank you for sharing.
And if it works out, Marco, I'll just send you an invoice and just send me the wire and all is good. All is good.
What's the fee structure? I think it's 2% management fee and 15% of the profits, right?
We'll do 60-40 in your favor.
60-40. Okay, that's fine.
No, but yeah, man. I like the trade. I mean, we'll see how it plays out. I do like that. Like you kind of worded it better than I did. The downside pressure is somewhat limited. Now, obviously, nothing is certain in markets. So I definitely have to disclaim that to the chat. Nothing is for certain there. but I do like that there's a little bit of stars aligned when it comes to this one to the upside.
Yeah, I mean, in trading, it's all about having a slight edge. If you have 55% win rate and a 1-to-1 reward to risk, you have an edge. So over 100 trades, you're gonna make money, and that's kind of what most traders have. We don't have a crazy amount of edge where we have 70% win rate and a 2-to-1 reward to risk. We just have to roll with what we have. So I do like putting a buy setup on USD CAD. Anything else that you're watching during this time? Has the situation on anything else changed for you?
Not really. I just really want to see what the follow through is like for this. Again, what kind of makes this a little bit more tricky is that you're having some resistance from the Iran side. It seems like as far as the headlines go, it's not like a clean ceasefire. Like my whole actually my whole thought process will be entirely different if like both of them shook hands, they publicly said, yeah, this is over with, whatever, we have that same objective. It's kind of a little bit more foggy as far as looking through all of it and the headlines go. So that's why I'm kind of like hedging myself right now with the possibility of not like a re-escalation, but just like the not the de-escalation that the markets are currently thinking for, like a complete like rainbows and sunshine type situation. Like I think it's going to be a little bit harder than we anticipate. So that's why I'm currently short Kiwi Dollar. Again, risk defined, the technicals are there, the fundamentals are there, so I'm okay with accepting that. And then the dollar CAD, if I get the opportunity on a pullback or whether we confirm it via the meeting minutes, then I go ahead and trade that to the upside. But other than that, Marco, I'm pretty much like just watching the price action when it comes to oil and yields and the dollar. Gold, I know gold's definitely on top of everyone's mind now, especially since the landscape has so much shifted there. Is that something that you're looking to pick up there or trade, or what's your thoughts on that?
Absolutely. I do like gold. Seems to be selling off today, which is weird because it has been acting as a risk on asset lately. I'm just waiting for a confirmation from the edge finder. So let me just, okay, great. I do like the level. We seem to be above the 20 MA. Yes, today is bullish, but a big retrace. If you compare that to the S&P, it's definitely a different story. So gold not acting as a risk on asset as much as I would have anticipated, if I'm being honest. I think this conflict is unfortunately far from done. What happened is a step in the right direction, but it's pretty weak. I mean, it's pretty weak. The major points of agreement are unclear. I think the market's overreacted, and I think gold goes back to being a safe haven for the long term. So if this thing lasts for a few weeks or a few more months, I think gold catches a bit and goes up. So I like the current level. I like the technicals on the daily. We have bounced off of the 20 or 200 EMA, which is nice. I'm just waiting for the edge finder to flip bullish. Right now it's neutral, so I can't do much. It's sort of the thing that I'm waiting for. And the edge finder really has a high win rate on gold, so I'm really waiting for that confluence from the edge finder. But what do you think about gold? So it wasn't a safe haven. Will it start being a safe haven, or is there just too many retail participants or too many players looking at gold as a meme coin or a meme stock? What do you think?
There's definitely a lot of parallels with the price action of oil being like somewhat trading like a risk asset. So very interesting for that dynamic, because that's not the usual dynamic that everyone I feel is used to, right? Like everyone's, immediately when the whole war started and the gold was just, falling off a cliff here, everyone was very confused. But I do think that there is a scenario where gold becomes to be back in play, especially too, if like, central banks around the world are starting to kind of, indicate that they're looking to ease rates or depending on how they're looking to look past the oil spike there. I think oil can definitely go ahead, or not oil, gold can go ahead and become attractive once again, as people like. Would be looking for an edge finder score. This level here that we're actually nearby seems to be like a solid one, I would say, if you're looking to go ahead and attempt that one. But I think too early, in my opinion. Ideally, this one is a very solid level here. This was once resistance, then support, and then support on this humongous drop that we saw, and then support here once again. So 4,400, if you can somehow, whatever the catalyst is that drives that market lower, but somehow at 4,400, I think that is very solid support. With the 200-day moving average right below, maybe you can put your stop right there. But again, I would have to refer to the edge finder. But the score in regards to the edge finder for gold has actually started to improved, right, from what it once was.
Yeah.
Not a bullish score by any means, but it's actually starting to start to shift direction. So if you look at the bottom right of or bottom left of my screen here for the chat, you can see here that we were bearish for some time here, and now it's starting to trim a little bit. And so maybe we can go ahead and go into bullish camp. And if that does happen, to Marco's point, the edge finder is actually very, very very good at picking up signals for gold. I would give it huge props to that. So for all the gold traders there, like if you're looking to participate in gold or don't know what to do, I'm going to say get the edge finder, because once it starts to show that it's actually bullish, there is actually a high probability in that favor, once you have the technicals aligned, of course, to go ahead and trade that to the upside. But maybe gold starts to wake up from the dead.
Hopefully. I mean, the investors and traders that I'm watching, long term, they are long gold. They're saying that gold should wake up and start acting as a safe haven pretty soon, and that the initial shock from the war caused the sell-off, but long-term, gold should catch a bid. So I want to get in. I agree with them, and with the reasoning, I'm just waiting for the confirmation from the edge finder. Looking at the yields, definitely down on the day, so TLT should be up, if I'm not mistaken. Yeah, TLT up. I'm surprised by the move. I'm definitely surprised by the move. At the end of the day, you are trading oil, so whatever you're trading oil. I'm just surprised that the move on the S&P is so big. And I didn't check the Nas. Let me take a look. Nasdaq, pretty large move as well. I mean, if we get one more candle as this one, we're back to all-time highs, or pretty close to all-time highs. I think that's pretty crazy. Especially what caused the initial sell-off, which, okay, it was the war, but the struggle, the range-bound period was because of the AI capex spending and the rotation out of tech into energy. So even if we go to near the all-time highs, I don't think it's so bullish. The US stock market, I don't think it's super bullish. That's why I like the Nikkei much more. Yeah, Nikkei, absolutely my pick. And I mean, the move on the Nikkei today, I'm guessing other investors are looking at this as well. So it looks like I'm not the only one, because the move is absolutely massive.
Yeah, a lot of people are, it's becoming more normalized now to definitely go ahead and dabble into, foreign equities and all that good stuff. And, the Nikkei is definitely betting off of that. So very, very good there. Marco, I'm going to go ahead and start to transition out here. I did get a call from the wifey, so I'm going to go ahead and return that one.
Yeah, sure.
I'll let you go ahead and do your segment there. You got a DNA funded challenge. But everyone, thank you guys so much for watching. You are in great hands. And then we'll be covering the meeting minutes here with Nick and I believe Chris Pulver towards the end of the show. But thank you, Marco. Hopefully we can get that dollar cat position sometime today. And again, I will be collecting for that.
Sure. Send an invoice.
All right, man. Have a good one. Take it easy.
Yeah. Thank you, Alan, and see you tomorrow.
Alrighty.
See you. So I want to post the jot form for the giveaway, which is right here. If you want to participate in the DNA funded giveaway, just fill out this form and you will get entered into the giveaway. So it's going to be a 5K one-phase account. Check it out. If you're looking to get funded, we have a discount code for you, and the discount code is A1 Live. So it gets you 25% off any DNA funded challenge. Okay, 25% off any DNA funded challenge, A1 Live. And I'm currently using DNA. I have a funded account. I'm down 1%, so I'm down around $300. I have 2 trades open. I've managed to climb back out of a drawdown. I was down, I think, minus 5%, and now I'm back near break even, you can say. I had a pretty good experience so far. There's a big broker behind this prop firm, And they're using Trade Locker, which is absolutely amazing. Two greatest things about Trade Locker as the execution software. First, you don't have to use a position size calculator. So I used to wait, or with the other prop firms that I'm doing that I have from before, I need to do the position size calculator for every single position. And that takes a lot of time and it gets confusing. Trade Locker has the thing built in. Second thing, if you hit the profit target for the phase 1 or for phase 2, automatically the positions get closed and you pass. So no need to hunt for a profit target if you have multiple positions. It does everything automatically in the background. So I highly recommend DNA. Had a great experience so far. Once I hit $300 in profit, I'll probably request the first payout. So let's hope that happens. I'll do my best. The probabilities will decide. And with the code A1Live, you can get 25% off. So out of all of the prop firms that are actually reliable, and there's like 4 of them in the space, I think you get the greatest price with DNA with this code. Run through the watch list. Let's take a look. Oil prices, or oil. I'm out of this one. This was a signal in the A1 Discord. I don't mean to bombard you with links and codes, but the A1 Discord is, I think, the best Discord in the space. You have Alan, Nick, Chris, Iwind. So you have a bunch of traders who know what they're doing, who give out trades as ideas, of course. So it's not financial advice, but the trades are absolutely high probability and long-term can make you a lot of percentage. But of course, they're as a teaching tool, used as a teaching tool. Anyway, this was a signal. I bought on the 18th. I took 50% off at 111. I put a stop loss for the rest at 108, and I got taken out last night, right before the speech from Trump, or right before the end of the deadline. Okay, so net, this was 1.5%. This was a 1.5% winner. And if you want to get all of my positions, join Nick, Chris, Alan, Iwind, and me. Did I forget someone? I don't think I did. Use the code Marco. Okay, so the link to the Discord is in the description. Use the code Marco. You can get 25% off. Next one is UJ, which I love. I think UJ is a fantastic opportunity for 2026 because we are hovering right at the 160 level, and every time we hit it, we get a big sell-off. Best game plan for this: sell at 160, stop loss above 162, and take profit on any drop. I missed the first drop, should have taken profit, my mistake. I took profit basically today. So end up banking 0.6%, something like that. What's the game plan? If it goes back up to 160, I'll just sell again. You know, sort of the easiest trade out there. Just sell at 160. Same thing for Euro Swiss. If you look at Euro Swiss, you have the 0.9 level. The SMB has been pretty vocal about it. It's a round number. And of course, humans working at the SMB, they like round numbers, as we all do. So they are ready to defend the 0.9 level. They have been vocal about it. I wish we go back to that level. So if it happens, I'll be a buyer. I'll just buy somewhere here, let's say, stop loss below the low, and then aim for a bounce. That's the game plan. Pretty safe play. Again, there are no safe plays in the markets, but your edge and the probabilities are really, really good with playing central bank interventions. And you don't even need an intervention. You just need people to be scared and panic and essentially buy Euro Swiss once it hits somewhere near 0.9. The only trade I'm running at the moment is Swiss yen, which is in a bit of drawdown, but looks pretty well. So AV, hey Marco, hope you're keeping well. Could you cover NZD-USD? Yeah, absolutely. Hello AV, I'm doing pretty well. I hope you're good, and we're gonna cover NZD-USD for sure. Let's do Swiss yen and then NZD-USD. Swiss yen, holding it. It's a sort of double play, or it's a play on two interventions. One from the Bank of Japan, the other one from the SMB. Both central banks don't want to see Swiss yen go above 204, so they're going to defend that level. and I think being in a sell position is a pretty smart play. The swaps are positive depending on your broker. They shouldn't be negative, so you can keep on holding this position for months, and the swaps won't eat you alive. You may even get some positive swaps, again depending on your broker. NZD-USD, let's take a look. NZD-USD, I know Alan sold, so Alan is playing for a bit of a fade. He wants to fade the impulse, which I think, looking at the macro, I think it's actually a smart play, because there has been a huge reaction from the ceasefire. But if you look at the ceasefire in depth, what has actually happened? Is the strait open? No. Could it be open tomorrow? Maybe. Can all of the ships pass through? No. Only, I believe, a select few ships can pass through. So the US is saying one thing, Iran is saying a different thing. Trump wants to get out of the war and the conflict any means that he can, because midterms are coming up and he wants to be a hero. You don't want to be the bad guy that's running a war during midterms. You want to be the hero that saves the day and that ends the war, which he started. But for most of the public, he's going to seem like a hero if he ends the whole thing. So that's his goal. He wants to end it, come out as a hero, and collect votes from that. Just my bet. But again, I'm just the guy on the internet. I'm not a financial analyst. I think the markets have overestimated the impact of the ceasefire. I think we could get a fade of the moves. I think we could get a drop on NZD-USD. Edgefinder is bearish, I think. I think it is. Yep, very bearish, which is nice. Goes well with my theory. So I would say bearish. Am I looking to execute a position? No, because personally, I don't have enough conviction. I don't have enough data. I don't have enough evidence to go ahead and sell. I'm trying to stay as flat as I can at the moment because there's just so much uncertainty. A lot of the guys that I'm following and watching, they're reading their newsletters, reading their Twitter posts. A lot of them are neutral. A lot of people that usually know what they're doing don't know what is happening at the moment. So I'm staying flat. Flat is a position. Flat can save you a lot of losses. Don't be afraid to stay flat. So I hope that helps you, AV. Again, if I had to make a decision, it would be to sell, but I wouldn't like to allocate capital on a sell at the moment. I want to post the link to the giveaway one more time, just in case you missed it. So here's the form. In the comment section, you can find the link to the form. Just fill it out, and you will get entered into 5K one-phase DNA funded account. I do these giveaways once per stream, so you can catch me every single day, and you can participate pretty much every single day, but one email per month. That's the limit. If you have multiple emails, you can go in multiple times, but usually it's one email per month so that everyone gets a chance to win a challenge. Okay. Running through the watch list, Nikkei. If you have been following me for a while, you know that I would love to get in on the Nikkei. I think it's a great buy. I'm not the only one, because the daily candle, so we're up, 5.4%. That is massive. We are almost near all-time highs. I want to get a pullback, and then I'll be pretty happy to take an initial stab long. So even though I'm neutral at the moment, even though I'm not sure that the ceasefire is in play and that it's actually as bullish as people think, I still want to play the Nikkei. I still am willing to deploy capital on a pullback on the Nikkei. So if we get like a flag or an ABC correction, if you like Elliott waves, which I don't, but I call it the flag. If we get a flag, I'll look for buy setups right here. It would be ABC. It would be the C wave, I'm guessing. We should ask Ballout from the A1 Discord. I know he likes the waves. But I love it. I love the Nikkei. It's my favorite thing. Selling UJ and buying the Nikkei, two favorite things for 2026. Absolutely. Gold, I do want to buy. I told you I'm waiting for a bullish print right here, so I'm not going to repeat myself too much. I'm checking gold every single day. Once it flips bullish, I'll go ahead and execute the buy position. Pretty simple stuff. So let's do the giveaway now. Let me grab all of the entries. Today is the 8th of April. So let me scroll through the list. 8th of April. Okay, nice. We have quite a lot of submissions, which is great to see. Grab the names, copy, go to the wheel, spin. Let's see. So, Malik or Ahmed? Ahmed. Ahmed S, congrats on being the winner. I have your information. So after my segment ends, I will send you the code. Okay, it's going to be a free 5K one-phase account for DNA. And just to repeat myself, if you're looking to get funded like me, for example, so this is my personal 25K funded account. I've passed the phase 1 and phase 2 here on these streams, actually. So on the streams, I update you on a daily basis of my performance. And I'm trying to get a payout. But if you want to pass a challenge and get a payout, use the code A1Live to get 25% off. Okay? Comments. Time for the comments. Let me see what you guys want me to break down. If you have any requests, any charts you want me to look at, now is the time to put them in the chat. I'm just seeing www, so I'm just seeing some spam at the moment. But if I scroll up, I feel like we have 1 month before the Aussie starts losing strength. Aussie CAD is a really nice play. CAD weakness is something that Aussie is taking advantage quite well. The DAX. The DAX, sure, we can do the DAX. DAX, German stock market. Personally, I think there's much better things out there. I think the DAX looks horrible. I think we are near the levels from 1 year ago, which just tells you to run from this. I think S&P is a better play, and I think that EK is a much better play. Germany or Europe in general does not seem to be doing well. If we do some analysis on the Edge Finder, if we look at the GDP for Europe, I mean, it's not great. It's near 0.1, 0.2. It's pretty bad. Inflation, let's take a look at the inflation. I think inflation is fine. If I remember correctly, inflation is fine, 2.5%. It's not like a big issue. What is an issue is the unemployment. So unemployment is pretty high if you compare it to other countries, especially other, let's say, bigger countries. 6.2%, but staying steady, if I'm not mistaken. It's not rising. I'm looking at the overall trend. It's actually falling. Okay, in relative terms, it's fine. If you compare it to other countries, it's not fine. So the biggest issue for Europe is that GDP. Europe is not growing. Europe is stagnating. So this is really, really bad. 0.2%, 0.1, 0.3, not great. So the DAX, I don't like it. Personally, Nikkei number 1, S&P or the Nasdaq 2 or 3, then maybe the UK 100, and then you have the DAX. So that's my thinking behind it. That's kind of my structuring. Let's see, gold, GBP NZD long, then I'm betting on FOMC is dovish, so waiting long, Taco Marco, DXY is bearish. So DXY to 95. Can we look at the DXY? Let's look at the DXY. So to end things off, we're going to look at the DXY. Dollar index. So this measures the strength of the dollar relative to all of the other currencies. We are at resistance. Personally, I'm a bit unsure. So I don't think the dollar goes up a lot more than this. I think the dollar was bought as a safe haven because it was the only thing you could buy. So if you look at the 2nd of March, yeah, 2nd of March, the explosion was just because of the war and the safe haven play. So it's all about oil. It's all about the US and Iran war still. I think we could easily get stuck at this resistance level. Personally, I'm not convinced that the ceasefire means an end to everything. I'm not convinced that the dollar just flies to initial levels and stays there. I think right now the probabilities are that the dollar goes up a bit more. Okay. So we could see this at least up into the resistance level, which would go nicely with Alan's play of selling NZD/USD and buying, I think it's USD CAD. Yeah, essentially buying USD CAD. So pretty good play there, especially if the conflict lasts longer than people expect. So that is about it from me. Don't go anywhere because you have Tiger coming on right after me. You can find me tomorrow. Okay, you can find me pretty much every single day. I'm streaming daily and I'm giving away one challenge per stream. Thank you very much for watching. Just a conclusion for my whole segment. Don't trust the noise. Look at actions, not words. If the strait is actually reopened, then it's game on to go risk on. If there's some sort of an issue with the strait, we're going to open it, but just for Chinese ships. We're going to pass. We're going to let 10 ships pass and that's it. Not a good sign. So keep an eye out on words or on actions, not words. Thank you very much and see you tomorrow. Goodbye.
If you are a swing trader and you are looking to get funded, then check out today's video sponsor, Ola Prime. Ola Prime has a challenge built deliberately for swing traders. Check this out. The Prime Challenge offers the ideal setup for swing traders with leverage up to 30 times. They also allow news trading. Weekend holding is also allowed. They offer up to 95% in rewards, and they have a 100% challenge fee refund available if you are able to complete the challenge. I know that a lot of people who watch these live streams tend to be more swing trader focused. So when looking for a partner to sponsor today's show, Ola Prime stood out as a perfect candidate. If you'd like to check out Ola Prime for yourself and get a live stream discount, then check this out. Simply use the promo code A1Live, that's A1Live, for 35% off any of their challenges. As always, make sure to do your own due diligence to see that this is in fact the right firm for you if you are looking to get funded. All the information will be now dropped in the live stream chat or in the description down below. Now back to the stream.
Well, what's going on, everybody? Happy hump day. Happy Wednesday. About said Tuesday. Hope you guys are all doing well. Let me get my pop-out chat over here so I can see it a little easier. Guys, let me know if you have any specific tickers you'd like me to holla at. Okay, I got that ready to roll. And then, yeah, as always, Trader Nick does have his code A1Live. If you guys are looking for a prop firm, 35% off the account of your choice. So take your pick, guys. You got Ola Prime. You got DNA funded as well that Marco brings up every day as well. They're both pretty good. I think they're both good in their own ways. I was kind of doing a little comparing and contrasting, so to speak. So, yeah, they're really both, you know, there's definitely pros on both sides. So take your pick. You're not going to hurt our feelings which one you choose, but at least you got a couple options now. And I'm sure at some point, you know, you never know. Maybe Nick may have some more choices in the future. So, but that's what we have at the moment. So definitely give it a look. And as always, let us know if you have any questions on that. Bunny YouTube, can we check out Kiwi Dollar? Kiwi Dollar make you holla. Let's do that. So it is at the bottom, still giving us a nice bearish signal. Let's go have a look on the technical side. Kiwi Dollar. So on Kiwi Dollar, okay, just like the Euro Dollar, just like all these dollar-based, everything, guys, obviously flipped and did a 180-degree retracement, if you will, whenever we had the ceasefire announcement last night. Kiwi Dollar is no different. Now, since we're wanting to short this thing, according to the Edge Finder, I really like what it's doing as far as retracing higher to a premium spot to be able to look at a possible sell. Now, because these things have retraced so hard, I'm probably going to forego the 1 hour. Like in this case, instead of looking for a 1 hour bearish candle, if it hits one of my supply zones, probably going to make it a 4 hour candle. Okay, I want to see a 4-hour bearish engulfing candle instead of a 1 hour, just so that it can give me another hour, another couple other hours to prove that it's actually done going up, because that's currently where we're at. I mean, there's your 4-hour chart, and obviously I'd have to have a break. So like, assuming we had a supply zone in this particular area, which also coincides with a former support resistance, which is this blue dash line that we see right here. Okay. Resistance turned to support. You could argue turn to support here as well. A little bit of support here, support right here. And then currently, is it going to turn into resistance? Well, it's a very good possibility. I just personally don't really see the kind of supply that I like to see, supply zones right here. This is just one of those big retail chops, right? Just this whole area right here. So a little hesitant about short selling in this area, just because of the chop. So for me, like I showed on that diagram, I think yesterday, I would want to go to the extreme levels to find more of an institutional type supply zone. So if I go to a daily chart, about the best thing I see is this candle right here, okay, where we based, and then we had a 2-day drop that broke structures. You can see I do have a red supply zone right there, kind of half in and half out of that daily. That's actually was that a 4-hour? What did I draw up? 4-hour? Yeah, basically a 4-hour supply from right here. And I think we might have just, no, you know what? I think I drew that up on like an 8-hour. Let me double check this. 8H. Yeah, 8-hour. So I basically drew this up on one of those funky time frames, guys, taking a look at this supply. Okay. This candle right here. So that would be the 8-hour. Now there's obviously, it doesn't matter. I mean, 8-hour, 6-hour, 4-hour. The point is you had some consolidating here across that 4 to 8 hour, span of time. So we did, however, kind of already bounce into the bottom of it. And that's why I colored it light red, because as you can see, we've already gapped in. Talking about these I'm sorry, not gapped in. We wicked in. Talking about these wicks right here. So I don't know that I want to be, I think what I'm going to end up doing at this point is sticking to the actual daily zone itself. And as you can see, I've got a white dash line kind of coming out of this. So if I drill down smaller time frames, I do believe I have a 1 hour hiding in there, kind of a 1 hour supply with the gap down. So that's currently where I'm looking. But again, I just want to see a little more proof, guys. I mean, it's nice to see this risk on movement in all the assets. It's nice to see oil dropping. I know drivers are going to be happy about that here shortly, when hopefully that starts to help the prices of gasoline at the pump. But I just don't know that 1 hour of proof is enough. I want to see a 4-hour bearish engulfing candle. So I'm waiting for price to simply pierce the daily zone, and then, start looking at a possible short like that on Kiwi Dollar, since you asked about it. 4-hour proof instead of 1 hour. Is that too much to ask? Right? I just want a little more proof. Trust but verify. And kind of like Marco said at the end there, okay, still a little skeptical. So, I mean, I wouldn't say I'm skeptical. I just want to see a little bit more proof than just a 1 hour candle. So that's where I'm currently looking at, just to kind of package up your answer for you. 5,900 level. That's a nice key psychological round number as well, at the proximal line of that daily supply, which incorporates this little hidden 1 hour zone at the top of this 8-hour, 4-hour zone as well. So that's where I'm looking at for Kiwi Dollar. Hopefully that helps out. Let's take a look up here. What's going on, LM Zen World? KDX, thanks. Having a great day. Pound New Zealand longs, Bunny is asking also. Okay, well, the Kiwi Dollar, okay, it is definitely one of the weaker currencies. In fact, guys, the Kiwi is now at the bottom. So the Kiwi decided to take the Swiss franc and kick it upstairs, and it now has taken over the basement. Just isolating the 8 majors. Okay, so I don't personally pay as much attention to the lira or the South African rand. I do pay attention to the yuan just to see how it coincides with Australia, since that's one of Australia's biggest trading partners. But other than that, yeah, I could really care less about the Turkish lira at the bottom. So as far as I'm concerned, 8 majors, the Kiwi, and is actually sharing some space down there with the Canada dollar. So I love the idea of shorting the Kiwi and the Canada dollar. Not as much hype on shorting the Swissy, since they did have a pretty good series of reports that came out. I do believe they had, what was it, the PMI data? Let me look. And their unemployment rate, I think it was. So let me just go take a quick look at the Swiss franc. Swissy. They had the services PMI. So they had a bullish reading, guys. Okay. It was only 0.1% higher than forecast, but that's all it takes to flip this box from red to blue and give it a little bit of a bullish boost. And then the unemployment rate did come out where they had 0.1% of a decline, which was nice to see for the Swiss and buying the Swissies. So there's that, 42%. And you got to be careful about this, guys. When it comes to these economic calendars, sometimes I have noticed when it comes to like FX or Forex Factory and Rebate King FX and whatever, there's all kinds of economic calendars out there. But sometimes you can actually, sometimes these numbers don't always line up. And I know I've mentioned this in the past to you guys, but if we take a look at the, let's see here, this is Tuesday. Where's the Swissy? Swiss. Okay, unemployment rate. So see, on this calendar, it had a different set of numbers. Okay, it had 3%. But then if you go look at a Rebate King FX, just as an example, it's kind of another calendar I like to keep an eye on. I think it's a pretty good one. And you go look at that same report, well, there you go. Different set of numbers. Forecast 3.2, beat was 3.1. And I'm not sure exactly which one Nick looks like, but all the other calendars I looked at, they all match what this shows right here. Okay. Trading View calendar was the same, and others. So just be careful of that. When in doubt, if you have the Edge Finder, just go check out here. Check it out here. I know Nick's got the best. I know he's got the best sources. And you can always go down here and verify that data here. Let's see, that was the unemployment. I'm sorry, looking at the wrong report. Labor market, that's what I'm trying to find. Unemployment rate, switch to Swissy. Okay. And then you can actually get your kind of a graph of all the recent scores, if you will. So just thought I would point that out because that was the first thing I noticed when I saw that Edge Finder this morning and I saw that the Swissy had gained some strength. I'm like, well, how is that? Because this report here shows a different thing. So at that point, I just go to the other 3 or 4 calendar sources and verify and notice that this one must be monitoring something else or whatever. Could be a subcategory. I don't know. There's so many categories to some of these reports, it kind of gets crazy. And that's generally why I like Forex Factor, because it kind of thins it out and only gives us the top line. So I don't know what's going on with this, but nevertheless, this is the correct scoring that we see on the Edge Finder. So it pulls from Alan's secret folders. There you go. Okay, Alan, the direct source. Okay. So yeah, you just got to be careful with these calendars. What else we got up here? Oh yeah, you were asking about Kiwi yen though, or Kiwi Swiss. Kiwi pound Kiwi. Sorry guys, I'm getting my words mixed up. Pound Kiwi. Let's go have a look at the text. Pound New Zealand, and then I'll tell you guys about my trade I closed out last night as well. So yeah, same thing. You know, we're kind of butting into this little bit of support area as we speak. If I'm just looking specifically for zones, I don't really have anything right there where I pointed at my screen, like you guys could see me pointing at my screen. But as you see right here, we do have a old zone that I was keeping an eye on, and it did bounce in and then pushed up. I can't use that because it's already been touched. It's already been mitigated. But interestingly enough, kind of in the middle of the drops that we saw on these all these assets after the announcement came out, this you guys see I got a white line. So that's actually a 1 hour zone. And what did we do? We wicked into it beautifully and pushed right back up before continuing the drop down. So I didn't have balls big enough to be trading this. I just felt like it was too close and way too volatile, since it was, you know, again, like I mentioned yesterday, this isn't really a red folder event. This is like a purple event, a purple folder event, so even stronger. So it didn't care, guys, about any of my supply or demand zones when this came out. And I'll show you that here in just a second. But anyway, just to finish up the analysis on your question here. So yeah, I'm still keeping an eye on this zone that's further down. This is basically kind of a 2-hour zone. We're getting past all this sideways congestion. And I got to be honest, even that might have too much congestion to the left. I got to be candid about that. Because, yeah, it is a decent zone on that 2-hour time frame. But how many candles are to the left? And what have I said repeatedly? I prefer my zones to be created out of thin air and cyberspace, not as a result of bouncing off of another zone or consolidating sideways for a long time. Because if I'm a bank, if I'm an institution, and I'm trying to get in at that price point, this is probably a lot of time for them to put in their mega order, their accumulation before the push up. So, yeah, that just so happens to be the closest zone. So that's why I drew up an alert there just to see what happens if and when it does drop in. But I think for today and hell, maybe even the rest of the week, until we get some stability on, hey, did we actually get confirmation that they've opened the strait? Now, I know they've let some ships through, but if we get some concrete, hey, this is open type stuff, kind of like Marco said there at the end, I think I'd be a little more okay with coming down to my normal confirmations as far as getting in trades. 1 hour reversal candles, okay? But for now, I'm sticking with a 4-hour candle, especially because we already did have a rocket that attacked an Arabian pipeline. And this happened like 2 or 3 hours or so, maybe more, I don't know. A few hours after the agreement came into fruition, there was already an attack on one of the pipelines that basically supersedes the Hormuz Strait and sends oil over to the west of Arabia. So there's going to be some belligerents out there that maybe didn't get the memo, or maybe they're not listening to their superiors if they are being told to stop sending rockets. I don't know what the case is, but I just feel like I need a day or two of verification, extra verification before I get into these trades. So yes, this is a possible spot. Yes, we are also, just to finish out my thought on pound Kiwi, we are also bouncing into a former support from back here. But I just don't see any good zones, guys. Okay? Maybe there's other trading styles where it would allow you guys, where it would allow somebody to get into a trade down here. It is offering us a nice discount, obviously. But hell, this thing could double that push down. We just don't know. So, yeah, we did have a 4-hour candle here, okay, that closed bullish. But it hasn't really broken any upward structures yet, especially if we go down. This is nothing but what? Lower lows, lower highs so far. So I'm afraid to be buying despite the bullish bias until we get a series of higher highs and higher lows, just exactly like we've been talking about lately for the indices, which, although we did get a nice gap up on the broader indexes today, we still don't have a series of higher highs and higher lows. So if you want to call the bottom, if you want to try catching a falling knife, okay, I wouldn't advise it, but maybe this would be a spot to do it. I'm just not prepared to do that. So just be careful on this thing. If you want my honest opinion, again, 1 hour time frame, 4-hour time frame, I just need a series of higher highs and higher lows on this thing. So there's pound New Zealand for you there. My trade. So my trade finally closed out last night. I got to say, and I was happy with it because it did give me a profit. You guys remember I had this profit target at this swing high after I bought into this 4-hour demand zone. Let me go to 4-hour chart. So we bounce into the zone. We start getting a little bit of slow higher highs and higher lows. We did come down into that last chance 15-minute or 30-minute demand zone right here, and we bounced in there. Again, I was already in the trade. Had I not been in the trade, that might have been a second chance opportunity. 50 is over the 200. Our RSI didn't really drop down to the oversold level, so that might have held me up. But nevertheless, it ran. And it got pretty much most of the way to my profit target. But obviously, when the announcement came out with the ceasefire, it just pushed through like crazy. I left a lot of money on the table, guys, as you can tell. But I'm okay with that. I'm okay with that. I didn't want to be too greedy because just as fast as it went up, And just as sure as it went up like crazy, it could have very easily retraced all that and went the opposite way. You just never know that. So the pound liked it, didn't quite benefit the CAD, obviously, because the CAD's tied to oil and oil saw a big drop. Okay. So overall, this was a very good catalyst I needed to get my trade over the finish line. So yeah, good stuff. No trades at the moment. Got to find something new, obviously, which I'm working on throughout the course of the day. And then, yeah, I just thought it was kind of interesting. I actually left just to show you guys all my alerts that have hit recently, just so that you can get an understanding of, hey, whenever these, whenever these geopolitical events come out, you can't trust almost anything until it kind of sifts itself out. So let's see here. Let's see. Oil, okay, was keeping an eye on oil. It just blitzed through all these demand zones, as you can see there. Dollar Swiss, same thing, blitzed through all the zones, blitzed through a daily 4-hour confluence right here, guys. That's a pretty powerful push up. Kind of getting a little bit of bounce from this 4-hour zone right there. But the point of me showing you this is just to understand no trading style is perfect. Supply zone broken through there. Okay, euro dollar broken through there. The point of this is no matter how good our trading style may or may not be, these geopolitical shockers like this will just chew through everything. Technicals mean nothing. The fundamental calendar means nothing. It's all about impulse. Fear and greed are in the market. There you go. And then, yeah, Bitcoin. I know I kind of touched on this yesterday. We did bounce off that zone and then flew up pretty nicely, which was kind of sad because we had a bullish signal for Bitcoin for a short while up in this area on Monday. And then by the time we dropped down, it had dropped to neutral. So down to a 4 or a 3, I think it was. So I ended up ignoring this nice demand zone. But again, it didn't care. Okay, the zone. And it was already up into this area by the time the announcement came out. So, hey, you know what? C'est la vie. The point is I stuck to my guns on the Edge Finder. Edge Finder is my boss. Sometimes trades will hit the zones and work perfectly. But I think more often than not, they may not work out as well. And I have seen that. So let's see here. Bonnie YouTube. Oh, yeah. Aussie Kiwi. Let's take a look at that for you. Aussie Kiwi, Aussie Kiwi, Aussie Kiwi. There you go. Same thing. We had a drop. We got a plus 10. We do have a zone over here I've got marked out. Now, this is kind of a similar story to your first question about pound Kiwi. We do have a zone, but if you look to the left, that's way too many candles for my taste. So anytime I get these zones that are in a big solid, a big giant consolidation to the left, I'm not saying I'll ignore it. I'll just, I'll stick hardcore to really all of the odds enhancers. Okay, is VSA, volume spread analysis activity. The institutional type of activity. Is it picking up on the way out? Is it giving that bullish engulfing candle? Is my 50 over my 200? Has RSI reached an oversought level of 20? I may even pull out anchored VWAP just to see if I can get a touch from my VWAP. I do pull that out from time to time if I like something, but my gut's just telling me, I don't know. So sometimes I'll pull out anchored VWAP just to see which side it's on. As kind of a final odds enhancer. But, just an initial -1 is not only the fact that it's got a lot of candles to the left, but it is a skinny zone at the same time. That's kind of thin for my taste. Oh, and by the way, we bounced into this overhead daily supply zone that was created way the heck back here on, look at this. We're going back into the Wayback Machine, ladies and gents, on this one. Okay. Taking a look right here from April of 2013. Now, you guys may think that sounds just stupid and completely ridiculous, but you cannot, if you're a supply and demand trader, you cannot ignore these higher time frame zones, no matter how far back they go. You just can't. Okay. A lot of people will say that if it's like 2-3 weeks, if it's a month old, if it's 3 months old, it's too old, it's expired. No, major levels never get forgotten. Okay. That may be, I don't know if that's a hot take or not, but from everything I've been taught from my mentors and from everything I've seen, guys, it doesn't matter how far back you go. Okay, they can definitely come into fruition at some point into the future. So yeah, that's where we're at. So I personally, just to finish, put a button on that question for Aussie Kiwi. I wouldn't be interested in buying it because we have bounced into that zone. Just going back to a daily. Yeah, I would definitely have to wait for something down below. Now, let me look at a weekly time frame. Yeah, not really liking the weekly look to it. Daily, that's too many candles. Yeah, again, I did draw up this zone a little deeper here. So we got the one zone that's got way too many candles for my liking. It's too skinny. And of course, it's too close to that supply zone that butted in. I think I would be waiting for this price action all the way down here, to be honest. I'm not even going to leave my alert there. I'm bringing my alert down here because at least if we look at this zone over here, look at how many green candles in a row we had. Yes, we did have some consolidation kind of in this general area, but at least this is at the bottom of that. So it's not like this zone is kind of in the middle of this sideways chop, if that makes sense. And that might even be cutting it too close. But at the end of the day, you know, we do have a very bullish signal, but we cannot deny that we've bounced off an old supply zone. And not to mention that the ceasefire announcement caused everything to drop. Okay, caused that asset to drop. So, yeah, I would just be careful. This is, you know, this is a swing low. This is a swing high. I just don't see any zones. And this right here, where it's drawing out a zone for me, has no volume spread analysis on this little mini expanded range candle up, as we can see by this blue tiny candle down here that doesn't mean anything. So that is not a zone. It is a zone. It's just a very weak zone, if that makes sense. Let's see. I got 4 minutes before Nick comes on. Let me see one last thing here. No. Dear technicals mean nothing. Fundamentals mean nothing. Then what means tell us today? Perhaps you are not right in saying this. Hey, you know, the good thing about that is we all have opinions, and that's what makes a market. Nick says it all the time. A lot of this stuff, guys, technicals, fundamentals, sentiment, a lot of it goes out the window when we have, you know, when we have these absurd types of pullbacks on these big red folder events, whether it's an NFP or rate decision, or obviously the ending of or beginning of a war. You just basically got a lot of people with their hair on fire, chickens with their head cut off, going out and making irrational decisions. So in general, though, we are seeing a risk on appetite. Okay, risk on appetite, but who knows? Who knows how much farther this could drop on some of these assets? We saw a gap up on the indices, but then in some immediate profit taking, you could argue, and it seems like it's kind of basing. Let's go take a quick look at the broader indices while I got a couple more minutes left here. Just taking a look at the broader indices, go down to a 15. Okay, we had a gap up, a little bit of profit taken, and now it seems like it's a little bit more of a resumption. So a little bit of indecision, guys, at the moment. When you take a look at the last couple hours, it wasn't an indecision about which way the market was going to go to open the broader indices, but after pushing up, where's it going? It's going sideways. So people are just waiting for price to leave that box. That's where we're at right now on all these indices. We're going to break it down. We're going to break it up. That's where everybody's at. So your guess is as good as mine. Again, it just all depends if the ceasefire holds. It's obviously good news to get the ceasefire, but then you start hearing about the belligerents, okay? The people that have been even hours after the announcement is still sending rockets at pipelines and a couple other places. So, yeah, just be careful with that. You know, as always, we take a look at I look at financial juice. I know Marco, I know a few other people do. There you go. You start seeing headlines like this. We're preparing heavy response to Israel's attack on Lebanon. Okay. So it's a ceasefire, quote unquote, but there's still uncertainty. So yeah, there you go. Who the heck knows? Some of this stuff just gets thrown out the window until we see a sustained direction. This, to me, is not a sustained direction. This is a bullish open, but it's not a sustained direction. We start getting some more higher highs, higher lows. Okay. then that's a little more, follow through with the risk on thought. But right now, it's, to me, risk on but hold. So that's about all I got for you today, guys. I think Nick's coming up to close out the show here in a minute. Do stay safe, ladies and gents. I'll see if I can find me a new trade to get into, and we'll discuss it further tomorrow. So with that, have a wonderful day. Nick is up next. Take care. Stay safe.
This next segment of the live stream is proudly sponsored by the one and only Ola Prime. Ola Prime is easily one of the most impressive prop firms that I've come across, with an incredibly professional team. They offer fast payouts within 1 hour, up to 95% profit splits. They have the largest number of trading platforms. I mean, just take a look at this list. They have MetaTrader 4, MetaTrader 5, TradeLocker, DXTrade, MatchTrader, and CTrader, all available to their traders. And that's just for the Forex side. On the futures side, they have DX Futures currently, with Tradeovate and NinjaTrader coming soon. Ola Prime has one of the widest selections for challenges and funded accounts that I've come across, with a wide range of account balances you can choose from, like 5 all the way to 200K. And just take a look at the variety of different challenges you can choose from to fit your trading style. They have a 1-step or 2-step pro accounts. They have the 1-step prime, 2-step prime, direct accounts, Ola Prime, 1 challenge. I mean, you have a wide selection here. And the reason this is so important is that you as a trader have a unique style. Everyone does. And finding the right challenge to meet your criteria is very important. If you go through their website, which I encourage you to do so using the link dropped in the live stream chat right now, you can explore in full transparency all of the different account types, all of the rules, etc. They also offer news trading and weekend holding, and they have direct and challenge accounts available. For a limited time, stream viewers get extra discounts using the promo code that you see on your screen right now, and also through the link and promo code being shared in the live stream chat. Take your trading to the next level with Ola Prime. Now back to the live stream. All right, everybody, welcome back. Hope you're doing well. What a great lineup of show hosts we had today. I listened to a lot of it. Tiger session, excellent as always. And of course, Alan and Marco, and Marco's solo segment. We've got one heck of a show here at the A1 Trading Show. So shout out to all the other creators. Good to see you guys here. Thanks for sticking around with me. We've got about 1 hour to go over some markets together before we get the Fed meeting minutes, which, let me just pull this up, what we've got here. So yes, we have the FOMC meeting minutes coming out in 1 hour from now, which has the potential to move markets and could be very interesting to see how that comes out. Today's market reaction was incredibly positive to what we saw take place last night, yesterday evening. And I mentioned in a podcast episode that I was on today that it kind of all took place right around 3:45 p.m. yesterday. You had this announcement of last minute, I mean, truly last minutes, with this being so close to that 8 p.m. Deadline, a last minute ceasefire that we'll see how it all plays out from here. But the market's reaction was telling. There is a massive surge to the upside in risk assets today, barring crypto, but I think it pulled forward a lot of its gains yesterday. Yesterday it was up tremendously, and now today kind of just flat. But all said and done, equities, cryptos, etc., cheering the idea that we are moving higher, or on the idea that this geopolitical uncertainty may have passed us. We'll see. It is too soon to really truly call. As you have heard probably from our other show hosts here today, making a decisive call that is the end and it's all good is probably not the base case in my view. I know that is kind of the stage of this market, right? We have uncertainty in the sense that things could go south on this ceasefire. But barring that, yesterday and the day before, I mentioned that my positioning and sentiment in markets on a spectrum from bearish to bullish. Let's go bullish. I put my sentiment on that totem pole If this is the midpoint, I pointed out that my bullishness slightly outweighed my bearishness. And I've been on this topic for a couple days because I think it's actually important that we make this distinction. You don't have to be fully committed one way or the other. And personally, in times like this, I think that the right plausible thing to do in my own financial, decisions, my own account, etc., you do your own thing. But for me personally, I feel that the right thing to do is to stay close to the center for now. Now, I don't like to stay there forever because gains in markets are usually going to come from being right on one side of these. But that is, in my view, a very difficult place to live right now. Granted, the market is telling you something the way it's moving. At least it's telling me something. It's telling me that this market, first of all, started going up before the good news came out. That's telling me that the market felt oversold and that people were coming in and buying the dip. While fundamentals are the driving factor behind why markets are moving, price action can also tell you something very important about sentiment, right? Sentiment, price action, oftentimes they kind of go hand in hand. But understanding that this market was very pessimistic at these lows, and we talked about it, gave way to potential upside moves. So I'm going to try to for the sake of making this more interesting, I'm going to speak my authentic, I always try to, but my most clearly defined, like how I am actually positioned, what I am doing. And you choose to do whatever you want. You should not copy me or anyone else blindly. You should make your own decisions, etc., etc. But I'll give you exactly what I'm doing in this circumstance. So I don't think that the right answer for me in the market right now in my account is to go full blown, full tilt bullish. However, if I had to, luckily I don't, as we're about to discuss, if I had to go one way or the other, would I go full port bull, full port bear? I'd be more on the bull side. I think price action has flipped bullish personally. I think that we got a very nice technical break, and I think it's clean on the Nasdaq. Take a look at this Nasdaq chart breakdown. So this level was like clear as day for the last few weeks. This level, support, 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 held like a stone wall, right? And then it fell apart. And then we shot lower. And this was where we had that pinnacle moment of the market bottoming on bad news. Many people have commented on some of my videos recently suggesting that we could be seeing the market in the formation of a bottom pattern with anger. And it brought me right back to April of 2025, literally 1 year ago, where the market put in its absolute lowest point on bad news. Now, that is very confusing to traders at first glance. You might say, well, how can the market bottom when there's it can't be at a bottom? The market's so pessimistic. It's so bad out there. It's going to get worse. The market is fascinating. It's very forward looking. And so at any given time, it's looking at what next, what next, what next. If you're kind of newer to markets, that's very hard to comprehend because you're thinking, the world's about to end. How could the market go up? But the market is thinking the world could end a week ago and is now thinking they might not want to let this happen, or they're starting to put into formation negotiations, conversations. The next move might be higher. And so the market is so smart that it starts bottoming before the crowd starts chasing it. Does that make sense? Alan says that put premiums were sky high and that people were ready for the worst. Let's dive deeper into that because Alan makes a wonderful point. And when you get this, guys, when you start understanding this, your brain starts going a mile a minute because you're like, whoa, wait a second. Market can bottom on bad news because the bad news was already expected. And the suckers, unfortunately, and I'm not saying this in a harsh way to try and make fun of people, but rather the people who are still learning learn the hard way that the market is sometimes 3 steps ahead of them. They read on the headlines, oh my gosh, Trump said something crazy. The market figured that out 3 days before that. And so you're chasing your tail if you're watching the headlines. You're chasing your tail if you're getting freaked out and selling or buying erratically, chasing what's going on. It's part of the reason why the old expression buy low, sell high is actually really hard psychologically. You know, from a long-term perspective, history might suggest that some of the best times to buy stocks, for example, are when people think it is the worst time to buy stocks. I'll show you because I'm about to get into some sentiment tools. It is especially useful to have the right indicators for tracking sentiment in times like these. Recently, we saw spikes on the put to call ratio, right? Put surging on the S&P 500. Maybe we can also look at other things just to see what was going on where are we at? Nasdaq, maybe? Yeah, look at this. So Nasdaq saw on the put to call ratio, puts exploded in popularity. People went out and bought puts like crazy. Oh my gosh, the market's going to fall apart. I got to buy some protection. And so what I'm showing you here is that a lot of times what the market does is it plays gotcha on the unsuspecting newer trader, the newer investor who sells their portfolio at the lows, who sells because they're terrified of what could happen in the Middle East tomorrow. It's not wrong to think something could go down, but it's wrong to think that the market hasn't already thought of that too, right? That's where you have to be careful. So here's Bitcoin, right? Bitcoin, same thing. We are seeing this across the lexicon here. Alan pointed out that put premiums were high. Let me show you another one. I'll raise you the AAII Investor Sentiment Survey, reaching the most pessimistic it had been since, wait a second, when has it gotten this pessimistic before? Care to take a guess? April 2025, the tariff lows. There's something so stupid simple about markets that somehow people never learn. It is that when markets are at peak pessimism, it's usually, historically speaking, a very risky time to try and short the market or to sell your account. Yes, Tiger in the chat, my man, you got it. Like it's so almost, I mean, it's not funny because people are losing money and I understand that. I'm not trying to be insensitive to it, but it's almost funny how like, come on, man, this is, markets just love to play gotcha. Look, I mean, so if we go back, let's go literally 13 months back just so we can see context wise. Let's go 15 months back. Look at this. Look at the last time sentiment got this bad. The market bottom. In February, March, and April, we saw pessimism, actually more pessimistic than current. And can I tell you something? I will never forget the type of messages I was getting blasted by during that time because I was saying that I was cautiously buying stocks. I have, for the first time in a while, been cautiously buying stocks again. From a longer term shopping for stocks that I like for the long term, like this is what I like to do. I like to wait for the AAII Investor Sentiment Survey to go into pessimism land. And on a sick and twisted, weird way, when I have a bunch of people commenting that like, there's no way you should be buying stocks, that you're stupid for doing that, which I don't have nearly as aggressive this time around, but I do have, people who are like, you cannot be serious, buying stocks is so dumb here. When you start seeing those messages, I am, again, just for historical reference, that has usually been like the best time in the world to buy stocks. So from a long-term perspective, what have I been buying? Well, I still have shares of Meta, which are flying today, which is awesome. I am up 1.36% today. The SPY is up more than me today. I am paying for it with my defensive posture. Now, remember when I showed you that little chart that I showed you, the let me see if I can go back to it. My totem pole. Can I get back to my? That might have been too far back. Yeah, it's too far back. Remember my totem pole where I said I'm kind of just slightly bullish, not incredibly bullish, not incredibly bearish. I'm up 1.3. The stock market's up 2.5. Clearly, just being long the market was the better call on the day. But year to date, I'm up about 14.5%. Stock market, I think year to date is around 1% down. So I feel perfectly fine with my positioning currently. Stockbox showing some good tickers. Visa, Meta, Netflix, and Microsoft. I mean, those are pretty much the ones I'm playing, right? So I have got Visa. So let me see. Visa, I have long 100 shares, and I also have calls sold against my shares. I also have Amazon, and I also have Meta, and I have a Microsoft short put position. So I'm definitely playing the long side, but not to the same extent of just being long the market. And I'll be completely candid with you. I want to go more on the bullish side. However, this is where I'm being authentic with you guys. I can't justify chasing it here. Now you might be saying, well, Nick, why, if you went from cautious to now more bullish, why is that? Well, I'll make a case for it, or at least my case. You do your thing. I'm not telling you what to do. If I look at the S&P 500, we've got a +7 on the Edge Finder. I like what Tiger says when he references the Edge Finder. He says, the Edge Finder is my boss. You know, if the boss says XYZ, then I'm looking into it. Now, of course, we should acknowledge that the Edge Finder in no way is like telling you to just go buy. But Tiger does a wonderful job in his live streams when he talks about this. He shows, you know, Edge Finder's giving me this report, and then I'm going to go look at it and see if it's right for me. There's times where, you know, I actually disagree with making a decisive move on Edge Finder or on my trades, even though the Edge Finder might have a particular view, right? So even with SPX bullish, I'm showing you in real time right now, yes, there's a +7 bullish rating. I am not buying the S&P 500 today. I think in the short run, you might have a little bit of an overbought status. I also listened to Marco's segment earlier where Marco mentioned that he thinks in the short run, the ceasefire optimism may be a little bit overblown or overdone. I think that's fair. I mean, I do consider myself more shifting into the bull camp, especially when I look at Nasdaq. I think you've broken this downward curse that we've been in, and we've got a nice move going here. We've broken through that critical spot, and so I'm eyeing up the 38.2%. I think if that retraces, then I can set up a plausible scenario where maybe that optimism bump that Marco mentioned earlier, that cautious tone that Tiger mentioned earlier, the somewhat wanting to be kind of in the middle ground that Alan mentioned earlier. Like you listen to all the different guys on here, I think caution is a fair consensus. So am I bullish? I would say yes. I've gone from slightly bullish to, I would say, moderately bullish now. However, that's my view on the markets, but I don't necessarily have it fully reflected in my positioning given the beta in my portfolio today to the S&P 500, right? So S&P's up 2.4, I'm up 1.4 or whatever. So my account is positioned less bullish than the market. I think I'd like to get that up to 1-to-1 if we get a retracement into a level of support between NAS, S&P, Russell, Dow. I like them all. I'd like to look at their technicals and see if I can catch a pullback. 0.5 beta. You got it, Sluggy. Yeah, so I want to get that up. It's the first time, candidly, in like 2026 that I have been wanting to have like 1-to-1 exposure that the market has. So why? Why am I so willing to now shift to the bull camp? Well, because there's a couple things. Earning revisions for U.S. stocks, earnings guidance, forward-looking expected returns for major companies in the United States have been revising higher during this whole period of time. economic metrics have been holding up strongly. And I do think that in the bigger picture, cool heads prevail might actually work out here. Yes, it's a 2-week ceasefire. No, there's not a certainty on how this thing may play out. But I think we've seen to an extent the desire of both sides to recalibrate and stop the wartime stuff. Trump doesn't want to look like a war criminal, and Iran doesn't want to get blown up. I think that cool heads on both sides will hopefully prevail. There's no certainty. Iran is unpredictable, and the White House also has been all over the place in regards to this circumstance. Granted, there is the fog of war for a reason. Both sides are going to stay kind of hidden in their true, ways of doing things naturally with war. But I think there is a want for both sides to see some kind of conflict resolution that also comes away with some kind of victory for each side. So I think that there is that narrative there. I think the market is also picking up on that. Price action would suggest oil, obviously dropping hard. By the way, I did get out of my oil trade. I put a SpongeBob meme out there because I felt it was very, very fitting for what went on. Let me see if I can show you guys this. Hey, by the way, if you're not in our Discord, we just dropped a free Discord chat. If you guys are in the Discord, members, obviously we still have our private conversations, and you can see trade alerts, etc., shared inside of the VIP room. And we have a full, list of VIP only content. But for people who at least want to join and check it out, the link to join our free Discord is now in the live stream chat. You can join our free trading chat room. We just opened that up yesterday, or Monday. So join us in there. What was I going to say? I was going to say, oh yes, I was going to show you my SpongeBob meme. So I posted my long position in oil to members like a week ago. And I posted this meme because I felt it was very fitting. I got taken out of my oil longs like moments before. Now I gave back some of the gains, right? So I didn't like close the highs and then, dip out. I saw that oil had been moving higher. I trailed my stop loss further in and locked it there. And then this thing like tanked, right? Fortunately, I was able to get out of the trade, took profits on it, and then it proceeded to absolutely just fall off a cliff. And so I put this very relevant SpongeBob meme of SpongeBob relaxing. But yes, I'm out of the oil trade. I'm no longer long. I also did have my euro dollar trade close out. So I took a euro dollar trade in 2 parts. The first part did hit target. So I did take an initial profit on the euro dollar, but then the second half of the position closed for a loss. The overall result of both trades was a slight profitable position. I also this morning closed out of my SPY short puts, which were a really profitable position. I was able to close out of 63%, give or take, of max profit. It was around a $2,100 profit. So we did okay on that one. So this is where I'm saying I'm kind of still in the camp of positive on markets, but I did take that profit off on the short put. It jumped up a huge amount in terms of open P&L. And so I just snagged that, took profits on that. And that leaves me to where I was just discussing. I'm telling you now that I would like to be more long the market. Granted, I can't justify just jumping into a long. I would like to see a little bit more of a pullback on the S&P and the Nasdaq. So I've got my level marked up on Nas. If we were to see this thing roll over here in coming days, this 38.2% retracement stands out as a level that I would be interested in possibly taking a long position on. The S&P 500, probably this 6630 level. I do think that we have recaptured the 200-day. Yep. So if we were to come back in, retest this 200-day to this 66 20 level, let's call it, give or take. This general area looks like a spot where I'd be looking for follow through to the upside, and with stop loss in place in case I'm wrong, right? Because I could be wrong. Things could fall apart again and get much worse. I don't know, and nobody knows with certainty what's going to happen next. But I do think that there is enough of a breakout in momentum to the upside, as well as macroeconomic data that has recently come out better than expected. Jobs market data was very good. We had an uptick in jobs report data last week. So I look at this and I say, okay, improving macroeconomic data, improving story for now, tentatively in the Middle East. And I think that kind of puts together a story. Oh, and by the way, yields are falling. So probabilities for rate cuts might start to maybe get priced back in. I don't know how quickly, and it depends what goes on with oil, but oil prices dropped. So I look at this, and I think there's a decent risk reward on the S&P 500, in my personal opinion, on pullbacks. That's it. That's kind of my main thesis here. By the way, Edgefinder, if you guys don't have a copy right now, it is a wonderful time to pick up a copy of Edgefinder, because currently it is 40% off, as you can see here on the bottom left hand of my screen. If you scan the QR code that's right below my camera, you can take advantage of our 40% off discount on Edgefinder that's going on for a limited time. We kicked off the Edgefinder to the public. We launched it to the public in April of 2022. And since then, we have had thousands of people throughout the world start using our tools and help us to continuously improve the tool. We've put in a ton of time, effort, energy, money into building the Edgefinder into what it is today. And currently, for a limited time, it is 40% off. However, if you use this link in the live stream chat right now to speak directly to a member of our support team, they can actually get you an extra 5% off, making it 45% off of the Edgefinder for a limited time. If you just message in and let them know, hey, I'm watching the show, can you get me the 45% off discount? They can share that information with you. They can also set you up with a payment plan if that's something that you need. A lot of times people, they want to get access to the Edgefinder during the discount, but they also want to make sure that they can split it up into a payment plan to make it more accessible. So if that is something that you need, scan the QR code or click the link that's just been dropped in the live stream to speak directly to a member of our staff. So there you go. Don't miss the sale event. Let's take a look at gold. So gold has bounced back. Is it sustainable? I listened to Marco talk a little bit about this earlier, and gold for me continues to sort of be the boring, not so interesting story. Jobs market data has been strong, kind of is a bearish catalyst. Strong dollar, not so great for gold. And let's remind ourselves that even with the shift in geopolitics, maybe causing oil to come down for a little bit and dollar to soften, while that is good, rate cuts are still not necessarily coming in hot for the US. The jobs data has been strong. Economic growth metrics have been strong. So that doesn't put a lot of pressure for the Fed to feel like, hey, we need to rate cuts dramatically, right? And so if you look at that, you say, okay, the story for rate cuts is just not very strong right now. And so maybe gold doesn't have that same fuel on the fire that it has had for a while. And something to note here, guys, is that even though the market is cheering what's going on in the Middle East, oh my gosh, we've got, de-escalation, this is great. Just a reminder that oil prices are still at $96 a barrel. There is still the possibility of escalation once more. There are also still many other parties here than just the US and Iran. There's also Lebanon and Saudi Arabia and, all these different countries that something could go down. So oil infrastructure is also still, there's been damage, there's been disruptions to that. Oil prices are not guaranteed to come down. And even if they do come down, my personal opinion is that I think that there's limited downside as supply is still in question. So you very well may see oil continue to pull back, but is oil going to go down to levels that, you know, we had previously been getting used to, which was $60 oil, $50 oil? I don't know. I don't think it's very likely that you see a plummet in oil right back down here. And if you did get one that quick, it's probably some sort of global economic problem, because supply issues, they have to roll through for a while, right? They don't immediately get fixed. So anyways, my thought on oil is I do think you could get a further pullback, especially if de-escalation continues. But I don't know that you're going to just see oil come right clean back down to 60. Euro dollar sells. So I was in a euro dollar short position. I am out of it. I took profits on my first half and a loss on my second half. The overall result of my trade on euro dollar shorts was a small win. Am I looking to re-short the euro US dollar? The answer is no right now. I'm going to, if I was to be short the euro dollar, I'd probably again be looking at a pullback up into like 1.18. The dollar index is maybe where we should go next, and talk a little bit about this. So we were teetering on the idea of breaking the 100.5 level. And if I go take a look at US dollar, you can see we have really, really dropped in score. Technicals broke downwards, obviously, with what took place. We lost that kind of momentum that we had in the last few weeks. However, fundamentals, macro data still supports decent strength in the dollar. So if I look at this, I'm saying, okay, jobs market data looks good. Inflation, the 2-year yield, watch that, because if that continues to trend lower, that could be a bearish catalyst for dollar. But anyways, I look at this and I say, okay, I'm going to go neutral on dollar for now. I don't have a huge willingness to immediately buy the dip on the dollar index. I do think that this party we were having where we're just holding support, higher lows, higher highs, I think that's been challenged. This 100.5 level, at least for now, did hold for the bears and bulls. Maybe we had our fun for now. At least for me, this is a time to just pause. I don't have bearish ideas on dollar. I just have neutral ideas. So I wouldn't be surprised if we just chop around for a little while and wait for clarity before. I will say what would get me more bullish on the dollar again is if the dollar actually started breaking out, right? If this is just a sideways, if we're going to go sideways here for a little bit, okay, cool. If you break out, then we might have a story here. But I'm just going to pause on that. I've had a lot of really profitable long dollar positions in the last few months. And for now, I'm just going to wait and see. Yeah, US dollar definitely in neutral territory. US oil also fell into neutral territory with the shift in, some of the technicals too. This will actually probably go even more neutral as this updates and as we continue to see oil breaking down in technical price action. Right, so you had the momentum here that was very clean for some time, starting to break to the downside. So I'm just going to take my profits on this one and move on, see what I've got next. Again, as I've mentioned a couple times on the stream here today already, my main setup right now, I would like to be long indices on pullbacks. So if we get the retracement on S&P to 6650 to 6640, if we get Nasdaq pulling back to 24,250, if we get Dow Jones, I don't love Dow. If we look at Russell, maybe a pullback into this 2550 area. These are spots where I can see taking a defined risk long position. But I like the idea of waiting for constructive pullbacks on this stuff rather than trying to chase it up here. The VIX dropped 17% today. At one point, it was down 25% or something like that. So VIX has really cooled off, but understand that it is still elevated at 21. you still have possibility of escalation once more. And so in the meantime, I think the VIX remains, I don't see it falling dramatically below 20 unless you get some kind of more concrete plan. But here's one challenge I would give you too. I think that the markets, I think that the geopolitical circumstance right now is for now showing promising developments. If you wait for full, conclusive, all clear signals, the challenge becomes the market will be up here, right? And the problem with the reason I point that out is that a lot of times people will say, oh, I'm going to wait until, we get the all clear. I'm going to wait until we get the go ahead. By the time you get the go ahead though, a lot of the gains are gone. So for me personally, I think that the risk reward, the developments seem to be moving in the right way right now. Obviously I could be wrong. Nobody knows for certain, but they seem, the trajectory, the trend of both price, macro, and even the geopolitical story seems to be shifting positively. And so if we got something in the short run that shot markets back lower, that's where I could potentially see taking a risk defined, meaning with a stop loss, long position. With confirmation from Edgefinder, I like that setup, right? Bitcoin's another one that I'm watching. Bitcoin is interesting. I've mentioned that if we went full-blown risk on, that I think Bitcoin might actually break out of its funk that it's been in for quite some time. Let's take a look at this. You've had this level of resistance overhead for a little while. There it is on the supply side. That's going to be your 75,000 mark. So if we get, something more decisive to the upside here for Bitcoin, maybe that is of interest. Also, I saw that I think the Iranians are like taking payments of some sort, their tax, in the form of cryptocurrencies. Someone maybe confirm that for me, but I thought I saw that. Take a look at UK 100. Yeah, so UK 100 looks really strong. And it makes sense, right? Same reason that the Nikkei looks really strong today. A lot of these places very sensitive to oil imports from places like the Middle East. Yeah, they're paying them Bitcoin. Yeah, it's really interesting. So let me see, UK 100. UK 100 is getting a really solid score here. Take a look at this. So fundamentals looking okay. I don't even remember the last time I have taken a close look at UK 100, the FTSE. Let's take a look at it. So technicals look good. Seasonality looks good. We don't have COT data for the FTSE. It's not something available. If we take a look at retail sales better than expected. Manufacturing PMI is better, worse than expected. That is wrong. 51.2, 51 point. These signals are flipped incorrectly. Give me 1 second while I write that down. UK 100 PMI signals. Okay. We'll get that sorted. Yeah, this should be bearish and this should be bullish. A more positive surprise is good for stocks and vice versa. Retail sales, consumer confidence came in better than expected. Let's see what else. Unemployment rate 5.2 came down. U.S. economic data showing resilient consumer spending. Central bank statements from the Bank of England emphasize inflation controls, bolstering index stability without sharp moves. Cautiously optimistic. Yeah. So I do like international stocks as a collective group. Like we could take a look at like EEM, for example. This is a emerging index for various stock markets globally. Looks positive. I mean, you have got this big jump, this big gap here. A lot of stuff on the international indices here, moving much higher today, and does look really strong. I heard Marco talking a little bit about the Nikkei. So I do like the Nikkei as well. Obviously up 5.5% today, so I can't really justify jumping in here. But if you were to get a pullback, it would be interesting, in my opinion. Maybe a pullback to like 54,500. So there's a lot of stuff. There's a lot of stuff out there on the index long side of things that I'm looking at. If we flip over to Nikkei, I believe it has one of the strongest scores right now, plus 10 reading. Looks really good. It's gotten a bullish reading the last few days, and we continue to move higher. Crowd sentiment lately has been bearish. Interesting. Who is held accountable when your edge finder produces misleading data? That's a great question. We have a disclaimer for a reason, and we always mention that data is not guaranteed to be accurate in the edge finder in our clauses, for the sole reason of what I just discussed. Bugs can take place. And so we have that within every disclaimer whenever someone purchases software, is to be careful of bugs that can happen. And that goes for, by the way, anything, right? TradingView, Forex Factory, all of those things should always double check with other sources just in case, because it's really important. Because errors can happen, you know, like being fully real with you, like, we run a software business, stuff breaks. We have to fix it all the time. And we're fast with it, to be honest, but it still doesn't change the fact that software issues, data delays can happen. Hey, Nick, I have a question. How does Edgefinder handle macro context shifts? High jobs data can be bearish in inflation, but bullish in recession. It's a good question. So to address that topic, yeah, let's look at S&P 500. So if you're pointing out like, oh, the Fed can't cut rates if the jobs market is too strong. So what we do is we look at them individually and we rely on the collective scorecard to build that bias. So let me explain. Good jobs, we just treat as good for stocks, right? Better than expected jobs are perceived as bullish for stocks. Because if you just take a look at jobs, regardless of kind of context for a second, and just say, is it better for the stock market and for earnings of companies if people are employed or unemployed? Obviously, employment being high is better for corporate earnings. Always, 100% of the time. If people aren't employed, they can't go out and spend money. Granted, you may then say, well, then doesn't that potentially put pressure on interest rates staying high? Well, for that, we factor that category in with our 2-year yield comparison and our inflation bias. By looking at the conclusive overall bias shown here, you bring up a wonderful question, which is, how does Edgefinder account for the collective view and the context of this market? And this is how. Inflation being hot is generally perceived as negative for stocks. But then also we look at jobs. Then we also look at manufacturing PMIs, right? So this reading doesn't shift based on what this is saying. The Edgefinder's overall reading takes into consideration all of this, right? I hope that makes sense. Yeah, please don't spam the chat. Come on, you're gonna make me cry. If I have to read sell for euro US dollar, tell me 100% one more time, then I'm shutting down the stream. Hey, you know what? It's way more relaxed than like an NFP day. Oh my gosh, you get a bunch of like random bot accounts jump in here and they're like, should I buy or sell gold? Should I buy or sell gold? And you get like 37 messages like that in a row. That's something else. Bunny YouTube, that's a great question. Thank you for that. I know as a software engineer, yes, you and me both. Software 101 is stuff breaks and you got to fix it. Keep building new things and improve it. And sometimes when you improve something, it breaks something else and then you got to go fix that and build improvements over there. And then that breaks something over here. It's like playing Jenga. That's what software engineering is like, playing Jenga. You like push something over here to fix it and then something else pops out over here. right? That's how it goes. It's always gold and the euro. Yeah. And sometimes Nasdaq. 100% sell for now. We never know anything for 100%. Sooner you accept that into your trading mindset, the better off you'll be. I had a comment from somebody the other day who said, Nick, when I first got started trading, I was one of those people who was like, euro dollar 100% going higher, or euro dollar 100% going lower, or gold is definitely moving lower, or gold is definitely higher. And they pointed out that with time, they have become the type of person that says, euro dollar, I slightly lean bearish, or it seems so minimal, but I'm telling you, the psychology of that shift is so important. Because if I look at the S&P 500, right? I've been doing this for a long time. I've been trading for 10 years. I can never tell you where the S&P 500 is going with certainty. But you know who can tell you where the S&P 500 or Nasdaq or gold is going to go with certainty? Someone who's been trading for 3 days. Like, I don't know what I'm doing wrong, but after 10 years, I can't tell you with certainty. But somehow some guy who just started trading last week, he knows for sure where gold's going tomorrow. Do you see the L shape or the U-shaped development? What's that theory called? Someone give me the name of this. This is there's a name for it. When you first start learning something, you somehow believe you know everything about it. And then you start to realize, oh my gosh, I know nothing about it. And the more you learn, the more you realize, gosh, I know nothing about it. And then slowly, years later, you start to recognize more and more, and you pick up and you learn from it. There's a theory, there's a name of this, right? There's this concept. I'm not making this up. This is a psychology thing. But it's really common. And actually, I've taken it to other areas of my life too, where it's like whenever I try something new, I recognize like my ignorance, right? There it is. Is that it? Dunning-Kruger effect? Look this up, guys. I'm telling you. Dunning-Kruger effect. Yeah, you guys got it. Boom. Thank you guys for that. It is so real in trading. It's unbelievable. Like I said, somehow, after 10 years of just obsessing over this, right? I can't tell you with certainty where the market's going to go. And I don't have to, by the way. Doesn't mean you can't make money, by the way. It just means I can't tell you with certainty what's going to happen next. But yet somehow, Lambo Bro 37.9 on YouTube can tell you exactly what gold is going to do in the next 2-minute candle. And he's 30 seconds away from being able to afford his 7th Lambo. What am I doing wrong? In all seriousness, though, those are the people who, unfortunately, they get smoked. Like those people lose all their money. And then they either 9 times out of 10, they quit trading and they give up. All of us have been there when they first start, right? Oh, clearly NVIDIA stock has to go up. It's the best company in the world, right? But with time, if you're still around, then you learn to humble yourself and you realize no one knows for certain. And all good traders are doing is trying to weigh the risk reward. That's it. That is really it. I mentioned my bullish bias shift on S&P 500. Do you know that I'm not sure where the S&P 500 is going, but rather that I think the risk reward is better being long with a stop loss than being short with a stop loss. I think that there is more potential gain on the upside than gain on the downside. That's it. Now, I'm waiting for pullbacks because I think that's where the deal even sweetens further. That's the spot where I'm like, risk reward, that looks good right there. I will take that trade and accept the full consequences of my decision. But no, Edgefinder does not tell you buy S&P 500 and print money. It doesn't tell you that. It tells you List of metrics. Generally, we're getting a bullish bias here. Okay, cool. Where do I want to take a stab at it personally? I agree with the Edgefinder's reading. I'd like to take a stab at 66.25. I'd like to take a stab at 24.250. In the meantime, what am I supposed to do? Take this hand and then take this hand, and then I'm going to just sit on it, and I'm going to wait. That's it. Because nobody, we've had a big move here higher. I don't want to chase that. And a lot of people probably did that right out the gates today, probably chased NAS and S&P 500. It might not come back to me, by the way. Like I might not get that setup. If I do, I'm going to probably take that stab that I've been talking about. But if I don't, then I'm going to look for other ideas or reset again. The next spot, I think that if the bulls just run to the upside here, I think your next major spot is probably 25,400 and 25,800. So if we clear those areas, then it will be new all-time highs and probably repeat the process. Like wait for that setup. You please go over how you interpret COT data on the Edgefinder? Yeah, let's do it. So in terms of how the Edgefinder interprets it, the scoring within Edgefinder, we look at the net positioning of the COT data, which is more of a longer term indicator. And we also look at the latest buys and sells on a weekly basis within our scoring matrix. Okay. First time live with you. Welcome. Thank you for being here. Hey, I know I mentioned it earlier, but I'm sure we've had a bunch of people join here as we've got meeting minutes coming out. Join us in the Discord. We'd love to have you in there. We just launched a free chat room in our Discord. Now, obviously, the cool kids are in the VIP one, but if you want to start out and just join the crew here over on Discord, maybe we'll drop the link here in the live stream chat, and you can come hang out. We have a Discord chat that is free to join now. We also obviously have the paid access where you can see the trade alerts, etc. But for now, VIP or free access has been offered inside of our Discord. Are these Discords read only? No. So again, like I said, we just kicked off a free access chat room where you can speak to other traders. Gold's dropping here. Yeah, gold has been just so wishy-washy here recently. If I look at gold's reading overall, I've said this a couple times on the show today, fundamentals look bullish for the dollar on a macro level, right? Jobs data has been strong, inflation's been sticky, probably is going to stay sticky for a little while, rate cuts getting priced out. That story doesn't go away even with a ceasefire. So gold just, yes, it had a bump, but I don't know that there's a lot of follow through right now on gold. Maybe I'm wrong. Maybe it rips from here. I just don't see the same. It's a different chart than it was in 2024 and 2025. In my personal opinion, if you're trading it just like 2024, if you're trading it just like 2025, buying every dip, trying to catch runners once to the upside, I don't know that you're going to have the same kind of success in this environment. Lee, who is a frequent, he might even be in the chat with us here today, maybe not. He self-reported, and I respect this. I respect this a lot, by the way. He self-reported that he's like, yeah, I had a lot of success trading gold in 2025 because he was on the buy dips, let them rip, and make money side of things. By the way, same here. Like that strategy might not work though now, because some of the same story, we've talked about this a lot on the channel here recently. The rate cut story has fallen apart. Inflation is likely to be sticky for a little while. That story for gold is a bearish one and has shifted this from an easy buy every dip type of price action chart to gold bulls are going to have to do some work here to get this thing grinding higher. Like rate cuts coming back into the picture. What gets rate cuts in a hurry? Bad jobs data. What do we just have? Strong jobs data. That's why it's picking up bearish on Edgefinder's scorecard for gold. Strong jobs, right? What about inflation? Well, inflation, 2-year yield's been higher. Producer price index came in higher than expected. We'll get CPI data on Friday. The story is just not as easy for gold right now. So this leaves me in neutral camp. If I was to do anything, if I had to place trades on gold, personally, not financial advice, I'd probably be looking at like selling strangles on it. Like, I don't think it's going very far either direction. Maybe I'm dead wrong. That's my opinion right now. So that's it. What's up, Lee? Good to see you, my friend. Yeah. So again, gold buy the dip strategy. I mean, to my friends who were trading gold dips between 2023 and 2025, I think you and I will never forget that period of time because it was just a sweet spot. You just had the perfect story. Central banks are buying gold. They still are, by the way, but it's not enough. If you lose half the story and you still retain the other half, the bull case is still hurt, right? The big part that we are losing is we're going to get a bunch of rate cuts, inflation's falling. That story's gone. Macro matters, right? That's the whole point of what we talk about on this show all the time. Macro is a huge component to what we do. And so if you've been wondering, hey, if you're a technical only trader and you trade gold for the last few years, then you're sitting there with your arms crossed, one tear in one eye, and you're looking at this and you're saying, hey, how come my gold chart isn't easy money anymore, right? Well, put your pacifier in your mouth for a second and just like acknowledge, like macro matters, right? Macro matters. The story changed. FOMC guidance, we'll see what they say. I don't know how much in regards to new information that they're going to give. The Fed has been on hold with the whole oil spike situation. And so I don't think the Fed is going to make any drastic measures or moves, at least from Powell's recent remarks. Doesn't seem like he's going to, or they are going to make some kind of drastic decision on rates. So to be honest, I wouldn't be surprised if it doesn't move the markets very much, but it could. It could if they say something in regards to inflation expectations or jobs data. So we'll see. But Powell, I say this every time we do one of these, Powell is not going to be speaking on a stage today. A lot of times people, when they see FOMC meeting minutes, they think we're about to pull open a live stream with Jerome Powell talking. He is not speaking today. So let me save you the headache of rushing around YouTube and searching for Jerome Powell live. Trust me, I know exactly what you guys do because I do it too. He's not speaking today. We are getting a released document of meeting minutes, meeting like scribe notes, basically from behind the scenes of Fed commentary. Can it move markets? Yes. Does it usually? Not a ton, but it can. Right. So we still want to look for, we'll watch headlines to see if anything really interesting is found in there, but we do not need to be looking for on YouTube Jerome Powell live because he's not speaking. So save yourself the headache. Nothing of that nature is happening. Could still move markets, but it is a document release, not a Powell speech. How do I access the document? It's on the Fed's website. It is like a big text file. Personally, I don't try and read the document. I rather will just pull up headlines. There will be a bunch of automated, text reading softwares that will produce headlines out of the meeting minutes in the next few minutes, and we'll cover them here. So don't go anywhere, and I'll share my findings with you. Buckle in, chill out with me here, and make sure to subscribe. Hit that thumbs up. And I know a lot of you guys are probably new. I mentioned this earlier. If you guys would like to join our free Telegram channel, or if you'd like to join our free Discord where you can now chat with other traders, if that's something that you're interested in, it's completely free to join now. It's right here, and you can come chill out with the A1 crew. So again, link is in the live stream chat. Let's see. We've got 1 minute to go before that happens. Also, don't forget the anniversary sale. I know I mentioned it earlier, but a bunch of people have joined since. Our product that we talk about frequently on the show here, the Edge Finder, which is your kind of automated scorecard for macro fundamentals, crowd sentiment, technical bias, all that good stuff. It is currently on super sale right now. So if you're a regular viewer of my channel, you've been like waiting for a chance to pick this thing up, now's your chance to grab Edgefinder 40% off. Whether you trade gold, indices, currency pairs, other commodities, etc., this is your chance to pick it up at a super low cost. So either scan the QR code that's below my camera or click the live stream chat link that was just dropped to speak to our team about setting up a payment plan if you need access to that, discount offers, options that you have, etc. And if you're a regular viewer and you don't have the stock box, that's also on sale. We just did a 40% off discount on the stock box as well, which helps you scan stocks that you might be interested in. Like, for example, Meta, which is flying here recently. I don't know. Let me see. What's Meta up to now? It was up like 9% earlier. It's come down a little bit here. We'll keep an eye on Meta. But I am long the stock there. That was partially with the help of Stockbox. I really liked the readings here. I mean, you got a forward PE on this thing of 17 versus a 25 3-year average, give or take. Like, I feel like it's a decent valuation. I personally think the stock is a discount right now. Of course, not financial advice, but that's what I'm looking at. So I bought some stocks here recently in the dip, and I think in the longer run those will be decent pickups, but we'll see. I'm just going to be pulling up on my side, guys, headlines. If you see anything of interest, please share it with the class. Drop it in the live stream chat if you see any interesting stuff. Okay, so I have my first headline here. I'm just going to read it out to you guys. Most participants were concerned with a protracted conflict that could lead to further labor market softening, which could warrant additional rate cuts. So people talking, or the Fed meeting minutes pointing out that the situation in Iran could administer more rate cuts if we see economic damage. Many participants saw a risk of inflation remaining elevated for longer than expected amid persistent oil price increases, which could call for rate hikes. So that's pretty back and forth, right? So you have the conflict could lead to rate cuts, and the conflict could lead to rate hikes. Because geopolitical conflict, like what we have there, if it does, and it could escalate again, but if, let's say we did have an escalation that persisted for some time, if oil price, starts to go back up again, and let's say that it stays even where it sits, like let's say it just stays here for months on end, the economic damage that could happen could lead to corporate earnings coming down, which could lead to layoffs. Layoffs could lead to hurt consumers, which could lead to kind of that vicious recessionary cycle. So that is a serious concern. But at the same time, high oil prices can lead to inflation. So right now you still have a story in which even if the conflict is over, oil prices are going to remain elevated in the here and now, which could cause inflation expectations to go up. So it's tricky. You have kind of both sides of the mandate challenged by the geopolitical stuff. What are your thoughts on the Blue Owl Capital stuff? I really don't have a strong opinion on it. When I look at the XLF, right, which is financials, you are seeing a nice bump to the upside here today. I don't know. Private credit stuff is really not my specialty. So probably I would just default to following the trend on XLF, which has been recently down. So there is concern there, but maybe we're seeing a little bit of a breakout to the upside here in financials. Because of course, financial companies are all kind of wrapped up into that too. Please don't spam the chat. Can you tell about gold? We already talked about gold if you want to zoom back in the chat, but please don't spam it because then I can't read other people's comments. Nick, if growth, jobs, seasonality, etc. are all strong, but inflation is bearish, won't Edgefinder still overall show bearish? Sorry, Edgefinder still overall bullish since bullish factors still outweigh one bearish input. Yeah, so it is possible when looking at Edgefinder's scoring, it looks overall. There's possibilities where one of these things could look really poor. Yeah, so you mentioned like if inflation was bearish, but everything else is bullish, like the current example, yes, the overall fundamental bias can still be positive. Rarely do you get the perfect economic scenario. Usually it's like some things look good, some things look bad, and you kind of try and take the median, if you will. That's literally what Edgefinder tries to do. It takes the aggregated score of looking at the jobs market, inflation data, economic data, and gives an overall reading. So right now, it's slightly leaning in favor of bullishness for the S&P 500 in terms of macro. So we'll see. But when I look at S&P 500, I think you have strong earnings coming down the pipeline. That's kind of been expected. Growth in the economy is still showing resilience. We've seen PMIs that were much stronger than expected. Lately, we had manufacturing PMIs that were good. We did have softer than expected services PMIs, but retail sales strong, consumer confidence strong, jobs report was really good. So let's see what else we had. Any other FOMC stuff? Most of the participants said the war could result in the need for easier monetary policy if rising gas prices hit the labor market and consumer wallets. Fair. And that's the thing. There's the expression, I've talked about this many times on the channel, that the cure for high oil prices is high oil prices. Why? Because if oil prices are high and gas prices are high, it hurts the economy, right? It hurts the consumer's ability to spend, which ultimately hurts the demand for oil underneath, causing then lack of demand, meaning oil prices can come down. It's not really that easy because there's also supply issues like geopolitical stuff that can play into that too. But from an oversimplified way, oil prices being high oftentimes leads to oil prices coming back down. And vice versa, I guess, right? Low oil prices can be a stimulant in regards to consumer spending, but it's sort of a it depends moment, because it's like with both of those scenarios, really high oil prices or really low oil prices, there's other factors that play into it too. If oil prices are really low and jobs data is just terrible and the economy is just in the gutter, it's not necessarily enough by itself to get everything going again. That's usually where the Fed comes in and prints $1 bajillion and stimulates the economy in that way. Most participants commented that it was too early to know how developments in the Middle East would affect the U.S. economy and judged it prudent to continue to monitor the situation and assess. I think that's totally fair. Thank you for sharing that, Lee. So yeah, I mean, pretty much my stance is still there. I'm looking for pullbacks in indices. I'd be a buyer on weakness down in the 66.20 level on SPX, 24,250 on NAS. And if you don't get it, then you don't get it. I just wait, right? Based on how things have been going, I don't think anybody here would be surprised if in the next 12 hours you had some kind of ceasefire breached moment or some kind of market panic. I mean, the headlines have been so back and forth. I think it's one post away, and this is stating the obvious, I recognize. You're one post away from a reversal in this sentiment. Granted, I would probably be a buyer of that dip if we did see a move back down to this level, because I think the risk reward is kind of there. I finally understand that about oil prices now. Thanks so much. You're very welcome. Thanks for being here. And shout out to everybody who's hanging out. We got 950 people watching between all the different places that we're streaming at. I mentioned this earlier. Join us in the Discord. We just launched a free Discord access version where you can jump into the chat and speak to members of our team. You can, of course, many of you guys probably know our other streamers. That is of availability to you to participate in. And like I said, last call on the discount here going on right there. our Edge Finder 40% off discount. I'm gonna shut down the stream here in just a second, but before I do, I mentioned it earlier, but if you guys are not already using Edge Finder and want to take advantage of our 40% off discount, if you message in right now before the stream ends, we'll give you 45% off. It is an extra discount that we do for people who message in. We like the opportunity to speak to people, to get to know you, and to see if the product is right for your trading. By clicking that link and speaking to us, you'll be speaking to a real person on my team who can set you up with access to Edge Finder at our lowest price of the year and set you up on a payment plan with that 45% off discount if you need it. But it does not hurt to chat with a member of our team, to vet out to see if it's the right product for you. We'd be happy to send resources. They can also send you free access to our Edge Finder course that is completely free to explore to see if it's right for you as well, and so much more. Don't miss it. The 40% off anniversary sale is for only a limited time. So there you go. And with that said, guys, we're going to wrap up the stream here. We went for 3 hours, 11 minutes today, and it was a lot of fun. So thank you for being here, and shout out to you guys. Have a great rest of your day. See ya.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.